Good morning, everybody. Welcome to NinjaTrader Live. We have no deli today, Tracy. It's me and you, and I don't know that I like this. Someone has to say something to human resources.
I know. I mean, really. We've got a fantastic guest, though, this morning, Andy
Yeah.
Constan. He'll be on shortly. Good times. Anyway, though we miss you, Deli.
Yeah, but let me clarify. I'm ecstatic to be with you, just me and you. That's the great thing. But looking at all the work this morning that we have to do without him, that's where I'm like, all right, get this guy back here. I don't have the hair. I don't have the.
Oh, but you're looking pretty springy again today. So
Yeah.
that's a good
So
thing.
we had some excitement overnight, a little bit, especially with respect to Japan and maybe Chair Powell versus the administration. What's the big news?
Right. So we have, we had Trump, if you remember, his first administration didn't really like Powell that much and used to post about him a lot. And so he's been rather quiet until the explosion last night. He said Powell's termination cannot come soon enough. The U.S. is getting rich on tariffs. Uh, you know, Too late, Jerome Powell. He's always wrong. Like just a slew of tweets. So we kind of knew that they had already started talking about the fact that they're already looking for his replacement. Now, understand his role is up next May, so we knew that was coming. But they're talking about kind of getting a shadow person, a shadow governor beforehand. I'm not sure exactly how that would work, but so we're
Do you,
back to Trump.
I mean, do you think there's a scenario where he would actually retire and say, "All right, I've had enough. I'm going to go write a book now. Leave me alone," or he seems kind of a little bit, convicted to stay. So I'm not sure the possibility there.
Yeah, I thought about this, and I really thought that he would, if he was going to resign at all, he would have resigned at the very beginning of the Trump presidency and just, call it a day. I beat inflation. I'm out of here, and I don't have to deal with Trump. But he stayed, so looks. I don't think that I don't think that he would quit at this point, especially with Trump now on his back, because basically, he can say, well, you can't fire me, right? Because so I think he'll probably stay at this point.
Yeah, it will be interesting times. And we had some other news, I think, with respect to Japan.
Yeah, so yesterday Trump met with Japan, and we kind of talked about this a little bit yesterday morning. And I said that I would, stay on it and keep everybody informed if we heard anything. But we didn't hear anything until yesterday after the market closed. And basically, he said talks were great, but they have another meeting today. So nothing came to fruition as far as some sort of tariff resolution, but markets seem to like it on the open, and we're up fairly well most of the night, and we had a little bit of a sell off. Now they're bouncing again, but so there's some trade tariff optimism happening right now. I'm not
Yeah, I
sure
mean,
how
on the
long
stock,
that will last.
yeah, we're seeing like the stock index futures, they have a little bit divergence, right? So even the S&P, the Nasdaq, and even the Russell are a little bit green this morning. The Dow is just getting hammered this morning. And it's probably a combination of Nvidia and then United Healthcare came out with earnings. that they revised their forward guidance down, I guess is a good way to say it. American Express comes out and says, our guidance is subject to macro environment. So everyone's kind of hedging themselves because of this uncertainty. This maybe it'll end in 90 days, but this cloud of uncertainty going on with respect to tariffs.
Yeah, absolutely. And we talked about this a little bit before, that I think the big story is not going to be earnings so much for this quarter because it's first quarter. I think it's going to be, people are going to be watching guidance and see if companies start lowering guidance across all sectors. And so I think that what they say is going to be actually more important than their actual earnings reporting this quarter anyway.
Yeah, and on that note, Powell yesterday even said something interesting. He was asked blatantly, if the equity markets start taking a hit or the bond markets start taking a hit, are you gonna step in? And he said his answer was no.
Well,
And
yes,
and
he
he's
was. He was very hawkish. He was not a hawkish, but for for what the market is expecting, he was hawkish. Let's put it that way. Since the market is expecting a lot of cuts, and we'll talk to Andy about this and his feelings about it. But um, he's pretty much stayed the course. I think markets were looking to kind of see if he would echo Waller and say if tariffs were big, we'll have to cut. And so I think markets really wanted to hear him say or allude to the fact that they might cut, and they didn't. And the markets reacted subsequently yesterday after he was speaking, when he was done speaking.
Yeah, and the other thing that struck me is it was very subtle when he said it, but I don't know if everybody heard it or not, but he said it's time to maybe institutionalize some sort of crypto, stable coin, if it is at the federal level, and he was suggesting it's so widespread now that it's time to institutionalize that. And I was kind of surprised he said it. And in this particular economic forum in Chicago, Bitcoin didn't. The Bitcoin futures, they're sneaking up on us, but they didn't react very much to that. And maybe there's no relationship between a stable coin, a federal stablecoin, and the Bitcoin futures. But I think there should. In my experience, there should be.
Well, I think it's odd that he would say something like that, because he in the past has said he's completely against a CBDC and that the U.S. will never have one, at least while he's Fed chair. Because we know that a lot of other central banks are definitely implementing or looking to implement a CBDC. So I don't know if he was alluding to a CBDC necessarily, or just crypto in general.
Yeah. So that was an interesting comment. In any event, I mean, I think his performance was pretty good. I think he was cool, calm, and collective under what you would think is a massive amount of pressure right now.
Yeah, absolutely. I mean, it'll get interesting. I mean, there are so many people all over the board as to, how many cuts we're going to get. The market desperately, seemingly wants a cut or any good news on the tariff front. But, we're still, I don't know if that low is the low yet, with all the uncertainty. So again, we'll have to talk to Andy about that too.
Absolutely, for sure. I mean, the U.S. dollar right now is slightly higher across
Flat.
most of the major currencies.
Yeah, I mean, it's definitely stabilized over the last couple of days, which is good. So, it's a little bit oversold, but it's kind of, since it's hanging around here, it's kind of working off some of that oversoldness. Is that a word?
Yeah. I gotcha. All right, so let's we have a special guest with us this morning. So let's bring in Andy Constan from Damped Spring. Andy, good morning. If you could pop in here.
Hey there.
How are you?
Hey, Andy, how you doing?
I'm doing great.
You're looking great. This is the first me and you met. You're looking great.
Like the
I went
beard?
back last. Yeah, I like it, man. It's good. I usually rock one, but when we launched the new show, the new NinjaTrader show, my wife was like, "You got to shave that, man." So I
Yeah.
did.
Yeah. My partner, Nick G on Twitter, is one of the other two gray beards, and I'm having a little trouble. I'm now one of white beard. So we'll see how that plays out. But I think I'll probably shave when I go bullish equities.
Ooh. All right. So
Ooh,
do you think that's going to happen anytime soon?
It's unclear to me right now. I think we're in a period of obviously great uncertainty. I think it's quite interesting that from Waller's speech, from what Powell said, and really the earnings that have been announced lately, which have had literally bifurcated guidance, there is just no certainty regarding what the economic policy of the Trump administration will ultimately land on. And that creates, high degree of really a bifurcated outcome. It's not like it's being here is not likely to be where we are. So sure, it could be much lower, or we could actually get some, positive news, but it's uncertain now.
Yeah, that
what
makes
is the
sense.
bond market?
Yeah. Go ahead, Tracy.
What is the
Well,
bond market telling us right now? Really, I mean, we had that massive sell-off. It wasn't so much the sell-off, I think, but kind of the velocity of the sell-off. Um, are are we out of the woods, or how are you looking at the bond market right now?
Well, again, it depends on the policy, but for now, the bond market seems to be pricing a. So let's step back for a second. Um, at the end of in January, I was very certain that a combination of the Fed being on pause, which they made quite clear in December, and the very significant backup in long-term interest rates that had happened by uh, early January, that financial conditions had become restrictive. Really, the first time I thought they had been restrictive this whole period of time and since COVID. And now that they were restrictive, that would create a slowing of the economy, which would be good for bonds and bad for stocks. Um, then layering on top of that, I thought at the same time, I thought that all of the potential Trump administration policies, except for deregulation, were anti-growth. Immigration, reducing the labor supply, which was an extension of already slowing immigration as Biden changed the policy um, in September, and then Trump obviously enhanced the policy. The budget cuts, whether Doge actually cut, was really irrelevant to me. They were targeting a smaller government, which was going to be anti-growth, maybe good, maybe bad, but certainly anti-growth. And then the tariffs, which raise prices across for pretty much for everyone, but some of that will hit the consumer. That will create lower demand, which is anti-growth. And so those set of policies resulted in what I thought was an attractive place to be short stocks and long bonds, but in particular short-dated bonds, 2-year notes, and so on. And that growth scare has manifested itself in an equity market that's 13% off its highs, 2-year notes that have fallen 50, 60, 70 basis points since then. Um, but now the long-term bond is staying high, even after it had rallied significantly during the growth slowdown. And as I look at that, that's not a good combination. It's high long-term interest rates continue to tighten financial conditions. The Fed is still on pause. And so you look at the Trump policies and say, how are they going to play out? Are they going to play out pro-growth? It's possible. You could see none of the expenditure cuts happen. In that case, you're going to have a significant increase in the federal deficit, which is likely to continue to put pressure on long-term bond yields to go higher. Um, or it could be, or tariffs could be much less than expected. Now, to be clear, the expectation was heavily anti-growth, and Trump surprised us significantly with the tariffs. So even if you go back to what was expected, which is sort of pretty heavy on China, but 10% across the board, that's pretty heavy anti-growth. So I don't expect anti-growth tariffs to reverse. And then you add on immigration's not going to change. So I think the only upside, which isn't good for bonds, is the call it the deep state, call it the Senate, call it Congress, not allowing for significant expenditure cuts. And in that case, that actually is pretty good for stocks, but really bad for bonds. So I think that's being priced is some outcome where tariffs are pretty anti-growth, immigration stays the way it is, and the federal deficit expands. Now, that's not super great for stocks because of the higher long-term interest rates and the tight financial conditions. So the way I add it up is the worst case is we go heavy anti-growth. That's good for bonds, really bad for stocks, and they test the lows. Or we end up modestly less anti-growth and heavy deficit increase, which is really bad for bonds and okay, but not great for stocks. And so my positioning is reflective of that, which is a modest short stock position. I'm long bonds, but really through premium sale, put spread sales. And what I really have been the strongest view on has been anti-dollar. And I still see that as a potential risk.
So with the
And
longer end of
since
the, oh, go ahead, Tracy, go ahead.
no, go ahead.
With
Sorry, we
the
have a delay,
with
so
yeah, no, I know we're getting better at it, but with the longer end of the yield, it rates higher. Um, and even Powell suggested it yesterday that it's, it acts as a form of policy tightening. What does that do to, what kind of pressure does it put on the Fed funds rate?
Well, it all depends on whether we actually have whether the modest growth scare that has been priced already becomes a real growth slowdown. And so far, the data is not supportive of a real slowdown. I think it will become a real slowdown for lots of different reasons. And that should cause the front end to price in more cuts. Frankly, I think we're going to get a slowdown, and I think the Fed is going to cut. The first cut will be in July, and it'll be 50. And we may get another 50 and another 50 by year end in the worst case. But I think 25 basis point cuts are completely off the table for now. The next cut's 50, whatever it is. That doesn't mean they'll cut. They may not cut at all. But if they do cut, it's going to be substantial. And I don't think the front end is really pricing that potential for significant cuts. And the stock market wouldn't be prepared for the economic outcome of a real slowdown. Long-term bonds, they're going to respond to the slowdown, which is bullish, but they're still not cheap. We have twos, tens at 50 basis points. We have tens, twos, 30s at 80, at 90-ish basis points. Maybe it's closer to 100. That's getting cheap, but it isn't going to suck up the supply and create lots of demand from carry traders, frankly, um, until we get steeper. And so I'm not particularly bullish on the long end, but it will rally. It'll just underperform the front.
And given that Powell has continuously said we need to see the data, right now the labor market's resilient, we're worried about sticky inflation, how would that result in like a 50 basis point cut this year?
A real slowdown, not the R word. Recession is a destination. I don't particularly like labeling anything by their destination. I like labeling things by their direction. But if you have a meaningful further slowdown in real growth, that will keep, for one, the tariff inflation is almost certain to be transitory. So I'm not particularly worried about the Fed being boxed in if they see a real slowdown. But a real slowdown would result in meaningful cuts. And that's where we're headed if the expenditure cuts of 1.5 trillion get passed by Congress, if immigration stays the way it is, which it will, and if tariffs take a form that is at least as anti-growth as expectations were before 4.2, which I think is still heavy anti-growth. And corporations have been, and we'll see this is an important time. We'll see this in expectations. We've already seen these bifurcated expectations. As markets begin, as equity investors begin, and as corporations begin to project pretty meaningful slowdown conditions, stocks will fall, and that'll cause a lot of the wealth effect and other financing cost effects and ultimately income effects as they consider job terminations. So I think you add all those things up, there is a very reasonable, very bull case for 2-year notes and a bear case for equities. On the other hand, none of that may happen. And so the question is, when do we start getting the actual data to turn over? You obviously have to be in front of that, and I'm modestly in front of that right now. I expect it to slow down.
So we've been listening to the drumbeat of Capitol Hill has to reduce their spending since the Bill Clinton administration. It never seems to happen. Why is this cycle going to be any different? Or maybe it's not going to be any different. I don't know. But it just seems like something we always hear, and it never happens. Spending just increases anyway.
I agree with you completely. I have no idea whether this Congress will allow Trump, or even if Trump desires to, in actual fact, and is willing to take the pain of a slowdown to cut $1.5 trillion off of expenditures. When you look at the numbers, what matters to growth is whether the G in the GDP formula, G plus consumption plus investment plus net export, changes a lot. And the Trump administration plans, if you pick the sort of 150 billion per year from Doge and 150 billion, which is lower than everyone thought, lower than what we were told, but not lower than everyone thought, and 150 billion of expenditure cuts, a $300 billion decrease in primary deficits expenditures is the biggest fiscal contraction we've ever seen in our careers. And so if that were to happen, it's going to have a meaningful slowdown effect. Will it happen? Trump seems to, Bessent seems to want to have it happen. He is very committed to the idea of heading in a direction of a 3% debt to GDP, deficit to GDP, sorry. Is Trump? Can he wrestle the Congress into accepting? That's for those who are more politically astute to assess. But based on expectations, that should be, if they achieve it, it should be the, as I said, the worst fiscal contraction in our lifetime.
And you brought up something interesting, and maybe you want to talk about it a little bit. You said U.S. doesn't have a debt problem; it has a deficit problem. So, what did you mean by that?
Well, I sent that in a Substack, free Substack post I did. Um, so there's lots of people, including my old boss Ray Dalio, who thinks we're on the cusp of of the United States going broke and falling into some sort of unsustainable debt crisis where we cannot roll nor can we finance additional um, debt issuance. Um, that is a debt problem. And I also think it's not anywhere, we're nowhere close to it yet, and there's no sign of us being anywhere close to it. Unfortunately, every year, and ignoring the somewhat increased interest costs that are in our overall deficit, we still increase our primary deficit. And, you know, I think that's the problem. That's got us to where we are in terms of our aggregate debt. And so it's an ongoing problem that, you know, as Jim mentioned, no one seems to care about. It's a bipartisan thing to increase the primary deficit. And so I think that's our problem. And unfortunately, the solution results in, is only occurs in a way that is unpalatable politically, which is not only deficit expenditure cuts, but tax increases. You have to do both at the same time, and no party's been willing to do both at the same time.
Well, and this administration seems, you know, they are going to push back against any tax increases as hard as they can, most likely.
Well, they're talking about leaving the millionaires high and dry on the extension of the 2017 tax bill. But at the same time, they want to give it to Social Security recipients and those who collect tips. And some SALT deductions as well. Yeah, there's no willingness to increase taxes from this administration, nor any other Republican administration. But similarly, they seem to be willing to reduce expenditures, and you know, Democrats aren't willing to do that. The problem is that it's not really the problem of, you know, regardless of what party is doing what. That's just a shifting of the problem. It's who is getting the benefit of deficits. Both do a great job in increasing the primary deficit. That's the one thing that you can count on with your elected officials, is increasing the primary deficit. Now, Bessent says he's going the other direction. He wants to take it from 8%, 7% to 3%. That's going to be really tough if we do actually have a slowdown, because tax receipts are going to fall through the floor and expenditures are not likely to get cut and could actually increase if bad things happen in a slowdown. So, you know, you can't be optimistic about the deficit, despite what Bessent is saying, and the direction of the deficit. And what you can be optimistic about is at least the expenditures are being brought down. But none of that's passed.
Absolutely. And we have data here in about a minute. Do you expect anything from this data? We have housing starts, building permits, jobless claims, and Philly Fed. Will any of these matter to the market, Andy?
The only thing I've seen is that were big statistics was inflation data was weaker than expected and pretty weak. And retail sales were in line with some positive revisions and some slight coldness in last data. Nothing that anyone can really point to say that the hard data is turning. But I think we're more likely to get answers from corporations regarding hard data than we are in the where are we? April data that reflects March conditions. More likely, and this is what I've been calling for a while, more likely we're going to see the hard data roll over in April reflected in the May releases.
We're going to get some numbers any
Yeah, that's
second now,
pretty.
Tracy.
So how we'll get the numbers really quickly. We have housing starts at 1324, down from prior at 1501. Building permits at 1482, in line. Jobless claims expected was 225. We came in at 215. So less than expected. Continuing claims came in at 1885. Expected was 1870. Philly Fed did come in at, it was supposed to, the survey was spot 2, came in at minus 26.4. So definitely weakening business conditions from the Philly Fed.
Well, we're not seeing any movement, at least in the S&P market right now on those numbers.
Andy, I wanted to get your thoughts on, a lot of people have been talking because of this move. We've got the dollar down, we've got equities down, we've got bonds down. Is this really everybody's just running from the U.S. and it's all foreigners selling?
Yeah, I think there is a get out flow that's occurring. And mostly it's a long-term structural flow consistent with a massive overweighting of the global market portfolio to US stocks in particular, but US assets in general. And the conditions in the US, which are relatively tight financial monetary policy relative to other countries, and tightening fiscal policy, is just very different than pretty much anywhere on the globe. The best case is probably Europe, which is in the throes of implementing significant fiscal bazooka and has monetary policy that, as President Trump mentioned, had reduced interest rates 7 times and is relatively easy. And that makes it for I look for a place where my capital is treated well, and where my capital is treated well is a place where prices are relatively cheap for assets, and the fiscal is accommodative and the monetary is accommodative, and none of those things are happening in the United States. And the global portfolio is heavily overweight, so the flows are out. Now I have some hesitation to, full on flows out, and that may provide some support for the dollar, in that real rates in Japan and Germany and in other countries are pretty low relative to the United States. And so I'd like to see the bond market in Germany and Japan correct a little bit more before I get super excited about diversifying outside of the United States. But that's clearly what has been going on. And it's been not a hate selling from the official sector of China. It's been global real money investors saying, I'm overweight and they're not treating my money well.
So Andy, we have about a minute left here. I'm interested in your opinion on the modern monetary theorist folks saying, well, we're just going to keep issuing more debt and everything is going to be fine.
So I think the plumbing of MMT works very well, and refer to the plumbing written by Warren Mosler quite frequently. The plumbing's great. The policy is unclear. MMT, just all it does is create the same thing any other monetary policy does. It creates expansion at the cost of future expansion. And so, yes, you can continue to do what you just said, potentially in ad infinitum, though I think there are some real money or real constraints, but we're not close to them. But it's a policy choice, and I think that policy choice is a poor one.
Got it. All right, Tracy, any last second thoughts for Andy?
No, just want to thank you very much for coming on. We hope to have you again. And thanks for spending some time with us this morning.
Sure, it was a pleasure. Thanks for having me.
All right, all right. So we are going to bring in Pharm right now, as usual. Good morning, Pharm, with the purple shirt today.
Good morning, Jim. What kind of fun are we going to have with Deli out today? We get to misbehave.
Yeah, we could misbehave. This will be such a better session than you guys have. No,
Absolutely.
don't tell him I said that. We love Anthony. So how have you been? How's everything going out west?
It's going well. Honestly, quite glad to have a short week this week. It was getting pretty exhausting towards the tail end of last week with, as much as the market has been moving, obviously. So, this inside week, while it can be choppy and annoying to trade sometimes, really has been kind of a nice little bit of relief for me anyways, given how busy it's been. So looking forward to the long weekend, and we'll get a couple of nice trades in today perhaps, and be done for the day, I hope.
Yeah, I've always found the day, and I'm interested in your point of view, the day before a holiday, trading gets a little wonky. It almost seems like folks are taking an extra day off and they're just spending time grinding in the markets. Now, we only had 211,000 traded so far overnight in the E-mini S&P, so not a huge number. It's an okay number, but not a huge number. What's your experience the day before a major holiday?
Yeah, I mean, the book can trade pretty thin, right? And so, sometimes it's just boring and nothing going on and it doesn't move. But the thing is, if there's somebody that needs to transact that has any kind of meaningful size into a thin book, then you can get kind of some of these wild moves that don't make sense at the time, but, end up moving price quite a bit and can pretty easily catch you off sides. And this is clearly a time where there's a lot going on, and I could certainly see that as a possibility that somebody needs to move some size ahead of this weekend. And of course, the longer the weekend during a Trump administration, the more headline risk there is. Obviously, just gives him, a few extra bathroom trips to post some tweets from the toilet. And so, I don't know who wants to hold risk over a 4-day weekend. Honestly, on either side, I think there's risks both ways here, of course.
Well, hopefully he spends some time in church and is just off the radar screen and is busy with that kind of stuff, and the Easter Bunny and all that stuff's coming up. So I don't know. Crazy.
Yeah, we'll see.
Yeah. So I'm just going to pull up a E-mini S&P chart really quickly up on the screen if I can. And this is our first time together, but I was like ecstatic when I saw your chart the first time and I saw the volume profile up there. This is something that I've been using for a long period of time after I learned a little bit about market profile from Dan Gramza back in the day. But the volume profile is an awesome thing. I also have a VWAP on here. I got that from Anthony. So this is just a 10-minute chart I'm showing for the overnight action. We caught a pretty nice bid going into the London session, which are my purple lines up there. And then we kind of retraced back down a little bit. See anything unusual here?
It was definitely an interesting session. We had some pretty thin structure on the way down yesterday. And sometimes what you'll see is, overnight we'll come up and repair some of that structure. And we'll see that when we get to my 30-minute chart or the daily chart. So I wasn't, completely surprised that we got that rally. It probably went a little further than I would have expected. I think there was, some optimism about a Japan deal. I think TSM reported, if I remember correctly. But got a little bit got a little bit excessive there, getting up to the 57.70s, I think, and now settling in probably where it should. We talked about the possibility of forming a double distribution week, and yesterday and today is sort of finding out where that pocket is going to be. So it's just a little bit of F around and find out overnight, and we'll see where we settle in for the open, which is going to be important today into next week.
On double distribution weeks, do you feel that volume deficit in the middle should fill in, or one of the distributions just wins?
I mean, it depends. It generally depends on the higher timeframes and the broader context, but I'm at least initially looking to use them as edges and not have them fill in and work against that low volume node. But there are certainly some low volume nodes that may separate distributions that they're not all created equally, I would say, right? And so that's where we need to see this one mature and see how it develops and see how clear it is. Because, sometimes you can try to work against an LVN and it turns out that it's not really an LVN that's controlled by either side. And so that's why when I say they're not created equally, sometimes they could just be junk.
Yeah, I'm just today we have a pretty interesting day. I know you like to look at the Russell sometimes. I glanced at the Dow this morning, and that's just it's marching to the tune of its own drummer. Unsystematic price behavior down 1.38%, probably on Nvidia, United Healthcare, and other things. Is that going to be a drag, you think, on the other stock index futures, or is it going to be an independent march? Uh, okay. Sorry, we'll get Pharm back here in a second. Here, we'll get to that Dow comment. You could see on my quote board here, the Dow's down 559 points so far this morning. Volume, again, average volume so far, given the pace, maybe a little higher for the Dow. E-mini volume is pretty normal right now. So is the micro NASI up $1.50. And then RTY, we'll pivot to RTY really quickly here, just to take a peek at what's going on. Small cap stock index, probably going to be a little bit more sensitive to things like interest rates and supply chains. So supply chains is going to be a real issue with the smaller cap stocks. Now, you could argue, well, but the large cap stocks, they have big facilities that they have to move. They have big infrastructure they have to deal with. And that's true, but they also probably have a plan B that, and a lot of CapEx that they can employ quickly, whereas the Russell doesn't. But the Russell seems to be pretty going the same way. We're up 0.3% right now on overnight trading. 26,000 contracts have been traded. So that stock index future is interesting. Just looking at this 10-minute chart, again, nice rally up into the London Open. Even at the start of the London Open, caught a bid, driving us all the way up to R1. That's that daily pivot number that I love to see on a chart. Previous session's highs, we didn't make it, right? So we've kind of framed the conversation at the top part about, where is the area of resistance. And again, I'll just draw a rectangle because that's what I could do, just draw a rectangle. Let's do that. I forgot to say good morning, chat. Good morning, chat. People, appreciate everybody being here today on this. Actually, I haven't even pulled it up yet. This is bad. I'm gonna get it up right now. But appreciate everybody being here day before a holiday. It's a clean 3-day holiday, I would say, with markets closed tomorrow. So let me just pop this up. I'm gonna get this chat going here. You would have thought I had that up already, wouldn't you? There we go. All right. All right, we're going to get Pharm back up on his feet. Good to see Kaz here. Firmament, everybody. Thanks for being here, man. Appreciate everybody being here with us today, NinjaTrader Live. Let's take a look at that NASDAQ while we are waiting for Pharm. Let's go to the micro NASI right now. 450,000 contracts traded. This looks similar, very similar, maybe a little bit more robust. Just looking at that session VWAP, anchored VWAP from last night. That's that white line going all the way up here. You know, we're trading above it right now. So there's one would argue that buyers are in control of this market right now, pre-market, because we're above that anchored VWAP from the session start. We're trying to get back into that London, the bottom of the opening range and the bottom of the initial balance in London. We're right at that level right here. We'll see if that continues to hold as resistance or if it becomes support. Nobody knows. But in any event, that's what's kind of going on here in the micro NASDAQ. Again, way different than what we're seeing in the other in the Dow. So let's keep moving here a little bit. We're going to go through some more markets, I think. I got to make sure I got all my windows properly set up here, which I do. Dollar's mixed, really, across the board. Not a lot of not a lot of direction. You know, the British pound sterling is pretty much unched. Swissie's actually down for the first time in a while. Euro FX is also down for the first time in a while. We'll pop up some daily charts and look at that price action. Canadian dollar unched pretty much. Aussie pretty much unched as well. Yen is down a little bit. So you know, maybe a little bit of pause we're seeing there. Let's see if I think we might have him back. Pharm, you back?
Yeah, I think that was the Chinese hacking me specifically. They didn't want me to share my screen and get us a bunch of good trades today. I don't know. Internet went down for a minute there.
All right. Well, we're ready for your screen. Whenever you're ready to share your chart, we're ready for you, man.
All right. I am shared. Let's see. Looks like we can see it. So, I mean, yeah, the first thing is we've just been talking about the fact that this is an inside week. And more specifically, we had these initial 3 bars from 4.3, 4.4, and 4.7. You know, the next, 3 bars were inside of that. And now the next 4 bars are inside of all of that. So we have gone nowhere. We are going nowhere until we escape some of that. So if you're experiencing a lot of choppy action and frustration that there's not follow through, if you're trying to swing, that's a big part of it. Just big picture. So until we at least get outside of this week's range at minimum, that would be next week, we're not really going anywhere. And so to me, this week, once it was looking like it was going to be an inside week, was just sort of keep it light, keep it simple, two-way tape, as Deli and I have been talking about. So I think that's the first thing to make note of. So again, if we can get back over these, 55.30s, 55.60s, through this prior area of consolidation, maybe we can make some upside headway. On the flip side, if we break the lows of this week and find some continuation, then we get a retest of the lows potentially, or, at least 5100s anyway. And we see if we just sort of build out this range a little bit further. So we've gone nowhere, and it makes sense, right? Because, we've had, some news, some pausing. Makes sense to if the tariffs are going to be paused, it makes sense for the index to pause and digest and figure out what's going on. So I'll flip over to the weekly. Go ahead.
Yeah, just real quick. I mean, on this pause, the pause has still got about 82 days left in it.
Yeah. I mean, to me, I think really what Andy said is ultimately what matters. I've been in agreement with his takes, at least from what I've seen, almost completely, the last number of months here. Like, tariffs to me are the narrative. It's not so much that tariffs cause stocks to go down. It's, the potential implication of tariffs that cause stocks to go down. And I am in his camp that, if it's inflationary, it's likely a one-time hit, and it could potentially end up slowing growth, especially with the potential for reductions in spend. And so that's been my sort of base case as well, is, growth scare at the beginning of the year, and then potentially some actual deceleration in growth. And we saw recession odds get priced up to what, like 69%, I think it was. I mean, it was something crazy as we traded into the lows, and then they came off with the pause. And, that's just temporary short-term whipsaw to me. The bigger news is going to be, do we have earnings decline, and do we have labor turnover? And those two things can kind of, go together, right?
Yeah.
So pulling up the 30-minute chart that I've got with weekly profiles, we talked yesterday about the possibility that we were going to form some kind of a double distribution or multi-distribution week down, and we've sort of started that process. And so we can see, obviously, yesterday ended up going,
All right, so we're having a little bit more of a delay here with Pharm. So let's just kind of go back to the charts here. So Pharm's using weekly profiles, which I don't have on my screen right now, but those are actually pretty good. That's a great way to analyze stuff, particularly by the time you're getting to, if you start your volume profile on the open Sunday night, and then you kind of let it roll, and you look at a weekly, what's the weekly distribution, and you get to Wednesday, Thursday, Friday, then it becomes a little bit more meaningful, right? Because these what I call these volume nodes here is price happiness. This isn't a perfect one right here on the micro NASDAQ for a daily chart so far. It's a little bit biased to the upside, but it's still an interesting profile. Imagine this being expanded to a week, which I think was what Pharm was showing, and so you kind of get a bigger picture idea of where the market participants, based on all the news that's been assimilated, are showing like price happiness or volume deficits, as I call them, between the double distributions or the multi distributions, as Pharm was talking about. Oh boy. Todd, good to see you. Todd Musser in the chat. Another long-term NinjaTrader community member. Appreciate you being here, Todd. So yeah, so usually Pharm's connection is really solid. Usually, I mean, there is haven't had some problem. Maybe it's me. Maybe maybe it's me. I don't know. I don't know. Oh my goodness. Furman says, someone please check on Taiwan. Uh-oh. Don't tell me we got more bad news hitting the tape right now. We'll see what the open brings us today. We do have Christian coming up soon in a few minutes here. Chris is going to be trading the open, and we're going to be chatting with him in a couple minutes. So we're excited. Trading boxes. That's follow him on X. He's pretty awesome, for sure. So in any event, well, let's keep rolling here. We'll keep rolling with some daily charts. We'll talk about gaps and all that stuff later with respect to where we regular trading hour close versus regular trading hour open today. We'll have some statistics from Edgeful a little bit later on. But I'm going to take this opportunity, since Pharm's trying to get back on his feet here, to talk about the interest rates again. I know we talked about it all morning. I know this is one of my favorite things in the world to talk about. So I'm just going to pull up a daily chart on the 10-year note, and this is the litmus test for me on whether or not things are relatively normal or they're completely out of whack. And I have a couple of rectangles. My hamburger bun here is forming the conversation between long-term area of resistance, long-term area support. Yeah, we had price dislocation twice above it and beyond it. Huge reactions in this market, where this market usually doesn't have huge reactions to it. So a lot of movement, but we're back in the hamburger bun. We're right back in the hamburger bun. We're right in the middle, and a couple of things that are interesting happen. Now, set aside macro for a second. Let's think about technical analysis for a second. We have on the stochastics down here, we have a cross, right? We have the percent K crossing, but it's a crossover. I guess we'd call it a crossover. And sometimes, not always, sometimes it signals a direction, a momentum change, or it's really a momentum indicator, but a change, right, in momentum. And this seems to be going to the upside, right? And really the trick here is let's kind of look at the distance between the gold line and the blue line and see if that keeps increasing or not. So that's my first signal that, okay, maybe we're going to drive to the top of that consolidation range that we're seeing, the upper part of the hamburger bun at the top there. The other thing I'm looking at also on this market is that crossover, from the 80 EMA over the 21 EMA, and that's looking pretty like a crossover. Now we need a continuation candle on the upside. We don't have one right now. We have a baby candle. This is an inside bar if you're just measuring bars by the wicks, not the bodies. So it's a small kind of move so far. Again, anything could happen today. The this normalness now gets us a yield of about, and I'm looking at the CME Group's micro yield contract. So it's going to look a little different than the cash yield you might see on a television screen, but it's pretty close. So it's 4.289. This is the first time we've actually had that yield below that 4.3 in a few days here. So that's kind of a good step too. So this is kind of stabilizing, I think, and it might just be marching to its own drummer for now while the equities try to sort this whole thing out. Oh, we do. All right. Sorry. Pharm, I was basically doing a song and dance stalling a little bit, waiting for you to get back here.
Yeah, I don't know what's going on. Cox internet carrier having trouble this morning. Looks like it's the whole neighborhood just being a little intermittent. So hopefully we get the last couple of minutes in here. So I'll just rip off, some thoughts real quick. 5340s, 5340 to 5346 is something key that I'm watching today. If we can sustain above there, we can rotate back up to this overnight high, and potentially even up to 5400. I'm not really sure there's enough excitement for that, but I mean, we've seen crazier things, and who knows what news is going to say. And then to me, 5314 to 17 is sort of key for sellers to find a way to cap as upside and find some traction for a potential retest of 5286. And then yesterday's low could come in play. But again, big picture, it's not even about, to me, what happens today as much as next week. And I'm looking forward to see, where we kind of fill out the rest of this week's profile to give me some idea of what I can be working against for next week. So that'll give me my initial lean into next week.
That makes sense. And then, so are you like logging in Sunday night and being like, all right, let's see what the initial response is based on all of the news overnight, or are you kind of wait for Monday open?
I'll definitely take a look. Absolutely. I'm a bit of a degenerate. I mean, I just watch price all the time. And so I'll definitely be looking, and depending on where we close here and then where we open on Sunday, if there's a setup that looks like we could hit high of night or high of week on a Sunday night or something, or low of week on a Sunday night, then I'll be there to trade that. There have been a couple of weeks where basically the Sunday night session put in the high or low of week. And if it's, the setup I'm looking for, then I'll be there to take it. But really the low 5400s are going to be key. That ultimately is what bulls will need to reclaim to negate some of this weakness from yesterday and, obviously today. And then, bears are going to have to, find traction below this week's low next week to really kind of do any more damage. Otherwise, we can just sort of fill out volume in this range, which you can see we kind of liked this area last week. And, we're sticky in this kind of general range again here. So we'll see. But to me, if there's going to be a move, it's not coming until next week, barring some news. And so, today's just going to be play some edges and see how things go. If I have a reliable internet anyways, otherwise maybe I'll just shut it down for the weekend.
Yeah, no, and okay. So the new, it's funny you're talking, the news cycle, it's every morning now I wake up. I don't know about you, but every morning I wake up and I think I go through all the combinations in my head. I'm like, okay, are we more likely to get good news today or bad news today, right? Who's speaking where, what's happening? And then the crystal ball part comes in and it's like, all right, there's going to be some kind of press event on Capitol Hill. Could this be good news or, time to buy or, or could this be bad news? I go through the scenario and it's really difficult to kind of get your arms around it and figure out what's going to happen day to day these days. And the markets don't like this uncertainty that we're seeing.
Yeah, that's exactly right. I get a lot of questions, hey, what kind of news do you think we might get this weekend? Or, what might come out today? Do you think there's going to be good news on, Japan or, I think we saw something about Mexico and then there's Italy. And I'm just like, you know what, to me, taking and making guesses about those kinds of things is gambling and certainly isn't any kind of alpha. So I just wait and react. And so more important to me is, how does price react to key areas when that happens? After that big move, does that move see follow-on volume and is it sustained, or is that move, completely rejected back into a prior range? Things of that nature, and it gives us an idea of at least where price does not want to go. And sometimes, to me, that's more telling than just seeing where price is going.
So where price doesn't want to go, meaning rejection, right? No one's interested
Yeah.
in doing deals up here.
Yeah, we certainly rejected 5,400 yesterday, didn't we? I mean, that was very, very clear. And we talked about that, yesterday morning, that, potentially looking for shorts up by 5,400. And they made that exceedingly clear that we did not want to go back up there, at least as of the information that was available to the market yesterday. And from there, it was complete free fall. I mean, sure, you can say it's block that like Jay Powell was hawkish or whatever, but, that was very, very clear. Potential LVN developing on the weekly profile for a double distribution or multi-distribution down. And that's what we got. So you identify, an area that is solid in which to execute, where you can manage your risk reasonably well. And sure, sometimes you get lucky with, 180 handle runners or whatever. But that's all we can do. News is gonna news. Maybe you're on the wrong side of it, maybe you're on the right side of it, but as long as you're executing at a solid location and managing your risk, and for me that's taking some profits and having a stop in place, then you could be completely and utterly wrong. And as long as your stop doesn't get completely slipped, you can probably still have a green trade on, even if you ended up wrong, as long as you were taking profits first, right?
Absolutely. Absolutely. Well, I appreciate you taking the time to be with us this morning. Have a great Easter weekend. Hopefully you have some nice, relaxing plans for the long weekend.
All right. I appreciate it. You too. Happy Easter.
All right, man. We have with us next one of my favorite cats of all time. Chris is with us, Trading Boxes. Chris, good morning. How are you?
Hey Jim, how's it going? Morning with you.
Pretty good. You must go to the same hairstystylist that Deli goes to because you have fabulous hair.
We do. We text each other to see when we're going to be available. Talk some markets.
Oh my God. I mean, that's worth a smash on the like button right there, for sure, folks. Just the hair alone, not let alone the talent that we're about to witness here. JP trading with the bicep. I love that. Again, thanks for being in the part of our community today. I know it's easy to take the day off because the long weekend is pending, but we're going to have some work to do today for sure.
Of
So,
course.
how are you feeling? How are you feeling about today's setup so far?
It's the price action is getting tighter and tighter. We've seen that since the last Sunday gap down. We've just been creating higher lows. We are still being rejected at resistance on the daily, like Pharm said, and it's just today it can be a little bit tricky just because it's OPEX. It's a 3-day weekend. We've seen the overall action just be tighter and tighter. VIX is going down, which is good for a lot of us who are, hey Patty, for a lot of us who are position ourselves in percentage-based size, right? So if I'm risking 1% of my trade, then obviously my contracts can be bigger if VIX goes down. That spread goes lower. But
Oh, that's just that's advanced money management right there. That's smart money management, right? Because we know when the VIX is lower, typically the ATR is going to go down, the range is going to be more manageable, and you could maybe lift a little bit more weight on your trades versus last week's mega candles day after day.
yeah, I mean, I had to do 1/3 of my size just to keep up, but hopefully things get better. Let's see here. So I can start sharing the plan that I have for today.
Let's do it.
Let me bring over where I draw. So we have ES and NQ. This is a little bit of a change in structure. We had higher highs, higher lows since that Sunday gap down right over here. Right, so we had a higher high, higher low, higher high, higher low, lower high, some consolidation, and then break lower. So that's changing the structure, and it makes sense why we're finding resistance there. That's the daily 20 EMA area. And, it's sort of coming in like this and providing that resistance. Now, what we saw in the last 2 days was this consolidation, which what I call wedges. And these wedges are just a contraction in time where there's no longer a higher high, higher low structure, similar to this prior structure here. We're just seeing a higher low, lower high, higher low, lower high until it breaks, and we get a new trend. And that's what we're seeing yesterday. We saw that breakdown on the NVIDIA news, consolidated most of the day, and then right around when Powell started speaking, similar to what Pharm said, it just so happened to be that he started speaking, but the structure here in the day prior told us that price wanted to now start a downtrend, right? So from a trend following perspective, that trend had shifted for the first time since that Sunday gap down right over here. So from a 4-hour perspective, we completed a 9MA, which is this yellow moving average, a 9MA downtrend. We've come back into this 5250, 5280 area, which was prior resistance over here, was support then here after seeing a failed breakdown. We back tested that yesterday in the afternoon, and we had a bounce. Going into today, typically what follows after a 9MA downtrend is some sort of wedge, similar to the one up here. And again, we get that because price needs to now contract, create energy for the next trend. And that's going to look like a series of lower highs, higher lows until we contract enough and we either break out or break lower, right? Since we are holding this strong line of defense here, the strong support, it makes me wonder if with OPEX, with us being inside, having an inside day, can we just continue to contract in this wedge structure, meaning we fail to reclaim the London highs or the overnight highs, and we essentially into the open, we move down to sort of create a higher low against a swing low here into 5280, then bounce again, just creating some sort of contraction structure to typical OPEX day. If we are not to get that, and we are to get some sort of continuation structure, then obviously we would need to reclaim the 5360s, which is around right below the London highs, and push back up to that 5390 area, which was that area that we were struggling in ES yesterday before we broke down. That would be the first target on a move higher. Obviously, it looks a little bit bearish, so maybe we do come down to seek a higher low and continue this wedge structure. For me to get bearish here after this strong support has shown or proven to us that price has bounced from there, we need to create acceptance, and that may look like just a lot of consolidation here and then a breakdown. So it's again, it's a little bit of a contracting pattern here where we are typically supposed to wait a lot of mean reversion inside as price sort of ping pongs inside. And we really need acceptance at the highs or at the lows to get that directional push. So that's from a 4-hour perspective that I use to sort of help me define the environment, who's in control. do I want to align with the sellers or buyers based on that strength? And since last Sunday, like I shared, we've just been in this higher highs, higher low area. And so we have been wanting to focus on longs. Sure, some shorts worked, but the majority of the structure was a higher high, higher low structure. So now that we are here on the hourly in ES and NQ, I have drawn the wedges, what they could possibly look like. I have my higher low wedge here, question possibly here. The scenarios that I have for today are, can we truly break London's low as we're sort of testing it at the moment? If not, we can bounce back up to 53.43. If we fail to reclaim that, we just failed to reclaim that here right probably 20 minutes ago. So the structure is currently on the hourly and lower timeframes, it's down. And can we ping pong in here? Sure, maybe, right? It's OPEX. Can we form acceptance here on the 5-minute time frame, break London lows 53.18, and then push down to 52.93 to seek that higher low? Sure, that would be my next scenario if we do find acceptance and then are unable to reclaim 53.18. Obviously, to break 52.93, we need to find acceptance. We need to sort of have this choppy consolidation that can just look like this, and then we break lower. If we don't get that, it's kind of hard to really, for me to look for shorts, because if we are creating this wedge, can we just do this, right? And again, have to sort of lean with the environment. We've been contracting in the last 2 weeks. Volatility has gone down. VIX has gone down. OPEX. So the higher probability for me is that if we do break 53.18, or for NQ, if we do break London's low 400 area, can we seek a higher low against yesterday's or prior day low and then bounce back up? If we do hold London's low for both, this is around 455 in NQ, 53.18 in ES, we can certainly bounce back up to sort of create that ping pong effect on a much tighter sort of structure. And that would be a pretty choppy morning. If so, well, we know that this 53.18 or 455 in NQ will hold. We can push back up to 53.43, and for NQ would be 560. Ping pong. If we are to break out today, and there are those days in OPEX where we do get some sort of expansion move, then that would look like a reclaim hold of 53.43 in ES, and then a push up higher, obviously towards London highs, and then of course the scenario of, can we just find resistance there because it's OPEX? I have to sort of ask those questions in my plan. But if not, the main obvious target would be 53.93, which was this prior resistance area here. You can see how I would sort of ping-ponging back then, and then broke lower. It tried to reclaim here, failed. It tried to reclaim again, has failed, as 53.43. So far, the most immediate structure says down. Now we just need to see if buyers do want to step in here and create a sort of a higher low against the prior day low, or move lower to create a deeper higher low for that prior day low. Similar to NQ, structure remains the same. The levels are just a little bit different. We need to hold this London low, 410 area. If we do reclaim this 560, my main target would be 715. The 715 is that 593 area for ES. Strong resistance there. I would expect, being that it's OPEX, to reject there and continue some sort of choppy structure. But if not, we can form acceptance. And, it's really easy for me to sort of adapt and say, okay, if we aren't finding resistance at this resistance area, then what is the structure that will help us identify a continuation above that or below support area? Well, it's acceptance. It's a consolidation. It's a wedge structure, which tells us that the trend, the higher highs, higher lows into that area has ended. And we are now in a wedge contraction, creating a higher low, lower high in this wedge structure. And then from there, a new uptrend can start with higher highs, higher lows. And at that, I can choose to participate if I'm not in a trade already long from the 560 reclaim, or just stay in my long and look for prior day highs, 865 area.
Yeah. It's, by the way, this is, technical analysis is not voodoo, by the way. Someone smart told me that. I have some levels from our friends at Mentor Q, and they have this 1-day max level that they publish every day. It's on my charts. 53.93 in the S&P, exactly. So there's a little bit of confirmation that level's important.
It is, yeah. It's a good one. We have to really dance around that and see what happens. But if we can't really break this inside this 53.18 or 53.43 or this 455 to 560s area, we're probably going to be in a really tight range into the open, and we'll just have to wait for some sort of acceptance and then break out or break down.
Very awesome. Well, it sounds like you're prepared. You're ready to go. You look refreshed. You probably had your Cheerios this morning. So you're gonna be trading the open for us right now. So I'm gonna go ahead and take a step back and take notes and watch you go. Best of luck, Chris, and go get them.
Thanks, Jim. Talk to you in a bit. All right, guys, and our ladies in the chat. Let's see what we can get this morning. What's going on, Elijah? So like I said, it could be a very choppy structure going to the open. I may need to be a little bit patient. Fat fish, what's going on, guys? And just wait to see what area we choose to break out of. Yesterday was a dream. Yesterday got short off that 53.93 area. Long off, on the bounce off 53.43. But we're just gonna have to wait and see what takes place. You guys trading already? Short or long? Let's see if we have any news today. We have some Fed members speaking. That's pretty much it. Daly, I'm gonna need a jar of that gel that you use. All right, I need my hair a little bit more perfect like yours. Yours is symmetrically perfect. It has the perfect acute angles at every turn. I need that. Might be a chat day where we chat it up, guys, if we're not really getting any action here. I keep hoping for I think my first few streams we had nice directional moves and was able to participate in them, but lately my Thursdays have been a little bit choppy. And then last Thursday, right, we just consolidating, and right as I got off, we had that move lower. So maybe we get that again. Perfect acute angles. Every turn is perfect, right? Like there's no bad angle for him. So I need the technique. Picture day in college, hated to see Delhi coming, that's for sure. Probably had best hair. You know how in the yearbook it says best something, right? Or most person to do this. Delhi's was 47 years of training. Delhi's was best hair for life against anyone. I was not in those yearbook pictures, but go to the barber. I need this guy's haircut. All right, let's see. We're holding that 53.18 zone for ES, 855, 845. No, 485, sorry, for NQ. Where's London's low? at 455. Oh, you know what? We actually took out London's low and ES and NQ did not. So we have a, as Kane likes to call it, a SMT, which is pretty much just divergence between the indices. So that's an indication for a possible reversal, as one index took out a key level, but the other did not. You know, in uptrends, we see that a lot. When we're in fresh daily sort of, we break out of a 2 to 4 week range, right? Like we're really seeing a good uptrend. A really solid buy is when one index takes out London lows or overnight lows. If it's not exactly at London's low, takes that out, then we have the 9-minute reversal that I like to participate in, and it sort of just, that's the perfect entry pre-market to buy, and you can sit in that for the rest of the day as you get this huge daily candle push higher, and that's really the best entry. Let's see. So on the 15-minute, we're seeing a reversal. On the 5-minute, we're getting a reversal as well. We held that push lower. Chat's balanced. Yeah, it's a pretty, structure says range. Let me share the daily here. Here's the daily. I have a lot of zones up here, but we're just ping-ponging, right? Similar to what we've done. But the good thing about this is that when we do break, we are, I'm looking for a big move up. Either this is a flush to flush out some early longs, and we move down here to seek a higher low and then push out higher, or we take out the lows to make a swing third lower low and then break out. If we don't do that, then we chop around, and I think I drew it on here. I know we're all bearish and I have been, but since that Sunday gap down, right, it's been a higher low structure. And currently we are in a consolidation that I won't get into it much, but I swing trade. And so I do a lot of analysis for that. All right, let's see. Nice reversal off London's low. That could have been a good long. I missed that. It took out London's low in ES right here. What is that at now? It's at 2R. So that would have been a good long to take back up to 53.43, ES back to, or sorry, NQ back to 560, 565 area as we come into the open. Nice 15-minute reversal. So if we do form acceptance up here into 53.43, then we can look for a long. The 5-minute did trigger one. So maybe if it can come down to 53.30, we can look for I'm going to look for a possible entry on a back test here at 53.31. Let me see what's stronger. I'm just not a fan of the 4-hour at the moment. We should get a move here. All right, I'm going to try half size here to see if we are able to push up higher into the open. If not, this is a feeler. Because if we do, so the idea here is that if we do come down and we're not able to continue higher, then price will come back down here, form acceptance, and then break lower. So if that happens, I'll just have to look for a short. Which means I might take a stop here. Yeah, 15-minute is just choppy, but it's we're contracting here. We're getting ready for a move. I might close it and just wait for that. I'm just gonna wait, guys. We have 3 minutes into the open. And he looks like it wants new lows. If we get a direct breakdown, I probably won't be able to participate because I need acceptance. So I need to see that we are forming acceptance down here. Maybe that's a little bit of a smaller consolidation. And then break down to 52.93. But we're sort of stuck in, we have 2 minutes. Sort of stuck above this prior, right, that midday resistance or towards the end. All right, here's our chop. Let's see what happens into the open. 700 people. It's a good number. We got, how much longer do we have? 1 minute. Well, speaking of opening ranges, we've been working on one. All right, let's see how it looks, guys. And we're really in a 10-point range in ES. NQ is a little bit weaker. I think from semis. Cyclicals are strong, financials are strong. A little bit of divergence here between the both, or between the two. NQ going for London slow. ES is still holding. Pretty divergent tape. Not tape, you know, for directional moves unless ES really breaks down here. Happened with OPEX with Easter. It's a tricky one. Yeah, it's pretty divergent tape. What do you guys think? We break here or we hold and we bounce? And keep leading the way lower if we are to see lower. Delta down. So I can't, you know, since I'm more of a directional and one, I would say I'm both directional and mean reversion. But in order for directional trades for my approach, I need acceptance, right? If we can't form that here, then there's really no entry requirement being met for me, and it's just gonna go without me. 5250, yes. I mean, yeah, that's far away though. We can definitely take out prior day's low. We have a bearish one. Fina. Both ES and NQ have a bearish fair value gap. Well, it's on the 5 minute, not on the 2 minute. Oh, London session. NQ leading lower. SPY still there. That's usually an indication of chop. Oh, 1 minute. Yeah. Yeah, tech is weak. Might be a slow one for us again, guys. At least for me, maybe. Oh, you know what took place last time? A lot of scalpers. It was a scalping paradise. So if you guys are scalping, this may be for you. NQ is certainly down. ES can follow here now. NQ back to that 405 level, which is really the last sort of area that needs to hold in order for us to really keep this structure. If we form acceptance here, and we sort of can't reclaim right on a back test, then this will mean that NQ will start moving lower to look for that higher low against yesterday's low. But in order for that to take place, or at least in order for me to participate in that scenario, I need some acceptance here. And ES is stuck. Yeah, Q's about to close the gap. Oh, they might have closed the gap already. The RTH gap. Nope, still there. Short at 23. I like that. See if you get that breakdown. Do 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 do. There's goes the ES. Who's short? AV short. What do I mean by oh, there's two AVs. What do I mean by acceptance? Acceptance is a consolidation that takes place at support or resistance that then leads to a breakout. So NQ is attempting to break below this 410 area, which if you guys remember from the plan, well, ES as well. If we do break, we trigger scenario 2, which would mean price is going to seek a higher low against prior day low. And that can be here at 255 for NQ, and for ES can be 52.93. We really do need to hold this potential breakdown, though, to see follow through lower, right? If we're not able to hold it, we're just going to revert back up and just get stuck in a range. But NQ is seeing a good drop here out of this sort of box. Let's see how we do on the first bounce from this potential, move lower. ES is still stuck here. It's not really moving. So if I was just looking at ES, it would be telling me, hey, it's going to be a choppy day, right? Because there's no follow through lower. Nice, Patty. When there's no acceptance here, let me see if I can find some acceptance that led to a break. Like this is acceptance. See how price pushed up here and rejected, right? Pushed up, rejected, pushed up, rejected. It didn't hit it up here, but it was sort of still resistance, right? Eventually we pushed up and rejected. However, on these rejections, we sort of kept holding and holding and holding. And then it sort of gave you an idea that buyers were stepping in and were not rejecting back lower. We were holding here and then we got the breakout. That's acceptance. So for me to take a directional entry somewhere, I need to have that structure there, because that will give me the best structure to sort of say, okay, if we break this, we do have a trend, right? If we don't, there's a chance that I could get stopped out, and I'd rather just wait for that structure. So ES might be creating a failed breakdown here. NQ still below that sort of breakdown area. I like the idea of a reversal long in ES, but just NQ is really not in that same area. It is a little bit lower and weaker, so I just need to be patient. Yeah, Patty. Yeah, not acceptance. But it was a break, right? So I mean, I used to take these breaks all the time in the past, but it would lead to stops, and so see, the spread is too wide. Let's see what NQ does. So there's a chance that ES can have a failed breakdown, but NQ is not leading that failed breakdown. So I'm not a fan of it at the moment. I would want to see NQ leading that failed breakdown, but it's below it, right? It's below the breakdown zone. So I'm not a fan of taking ES long when NQ is not leading that structure, which means I can miss it. But it's a little bit of a choppy tape. Bearish. Let's see. Oh, there is. I mean, right now it's stuck between a bearish and a bullish one. Fina. I agree. 73% of pre-Easter Thursdays are bullish. Yes, rejected back down. NQ so far to lower high. Lower low, lower high. Now can see if there's follow through. If you're short NQ, I mean, you know, the one to be short is the NQ. It's leading the move lower. So you want to be short the weaker one. Right? Really not much to do though here. Yesterday was a great day. Today open not the best. Yeah, this is dropping for you, AV. Yeah, scalping this. Who's short? Show yourselves. Pretty much just sideways since the open for ES. NQ a little bit lower, but still both are right back at where we closed the RTH session yesterday. Can we find support, right? And then attempt a bounce? Why short the weaker one? Because, you know, from a risk reward perspective, shorting the weaker one, let's say your short was, let me see if I can identify the same candle here. Let's see, this was at the 0630. So let's say you got short NQ at this break, right? This is how your R multiples look. Let's say you took short ES, same breakdown, which is at 630, or, you know, 630 Pacific time for me, but for you, it might be 930. It's this candle here. So you can see how NQ has moved down 1R. The black lines are at 1R, are, you know, one standard deviation away. So you have 1R, 2R, 3R, 4R. It has moved down all the way down to 3.5R. Okay, right here. ES has only hit 1R. So if you're, you know, looking to make the most out of your trade, you need to be short the weaker one or long the stronger one, because that will allow you to make more or have the opportunity to make more while risking the same. And you can see for ES, if you took that short, you're now at risk of getting stopped out after only hitting 1R. While NQ gave you a huge, 4 times your money already on that push. So no follow through lower. ES is looking at a potential fault breakdown. That's why you want to short the weaker one and go long the stronger one. Let's see what happens once NQ comes back into this breakdown area. I mean, if you're scalping this, beautiful for you. There's a good 90-minute reversal. So far, a little bit of resistance in NQ here. So far, scenario 1 remains for both. Let me bring it back over to share. Scenario 1 was for price to come down into this 53.18 area in ES, potentially push back up to 53.43, which is what we're seeing. We're sort of ping-ponging in this, what is it, like a 20-point range? 25. NQ similar, hold 400, 410, bounce back up into 560 maybe. But there's really, we're stuck in this very tight range, right? So there's really not much, from a trend following perspective, not much happening unless you bought these lows here. ES might go back for this 53.43. We did have RSI divergence on that push lower in NQ. As it sort of closed its RTH gap. But, it's tough to say if there's going to be follow through if we're just stuck in this range. Once 43, guys. Yes, it's going for that. See what happens in that rejection. What's ES at now here from this sort of reversal? 1.6R. What's NQ at? All right, let's see what we do into this resistance. If we come back down, so NQ needs to reclaim this breakdown area to get the opportunity. This is like the bull bear zone, right? It's if this is our range from 400 to 560, the bull bear zone is this 5-minute zone at 487, this gray one. So you can see how it's been support for a while. It finally broke, moved into this the hourly zone, and it's now back testing that, also back testing that breakdown. It needs to reclaim that, hold that in order to get the opportunity to go into 560s. See if it looks like just yeah, cyclicals are strong. Financials have a little bit of a greener open. Industrials. I look at indices a lot. Like, you know what's the strongest right now that I see? Staples, which is a defensive sector. Tech, a little bit of a weak open. But, you know, it's OPEX day. Not much happening on you unless you're scalping this here. Yeah, the names I swing trade and the names that I'm long are, they're just flat. NQ failed to reclaim this. ES is right in the middle of this range. I mean, you are, you know, you're making money if you're scalping this. Short at resistance, buy support. Hopefully we can form acceptance somewhere and then I can participate. Yeah, inside yesterday's value chop until it breaks. Absolutely. You know, we're wedging it's on the 4-hour. We're just in a wedge. "15 minutes starting to look like barcodes. It's very little for me to do here per my approach. Oh, Spotify's waking up. What's going on with this? We might push back down. You know what? I might try a short. But it's a little bit on the aggressive side. Would mean if this higher low fails here, would mean we can test back down the lows. Let's see if we can get followed through lower here. But I like the idea, but we're back testing this breakdown area. If we really can't we're doing something like this. If we can't reclaim, then price may want to revisit the lows and maybe attempt a new low. But so far, it doesn't look like that. But I'm watching here. Eight. Just some chop, guys. Choppity chop. Definitely not the day for me to put on size. We have had 1, 2, 3, 4, 5 hours of sideways in ES. You know, I kind of want to try a short just because it's, I want to see if we attempting new lows here as we fail to reclaim this 485 zone. We are in some chops, so we need to see a 2-minute 9 MA downtrend start here for us to get that move. I will take some off at 1R if we get it. I'm only doing half size because we're in this sort of range and it's hard to trust if we are going to break down or not. ES is going nowhere. Yeah, if ES needs to, NQ needs to sort of break down here, create a lower high. If we can't do that, I'm going to move my stop down and get out. It's not going to want to drop. Move my stop here. If it takes me out, then it's going to move back up here, and I no longer want to participate in it. I'll take a half R, maybe half R loss. That's fine. All right, no follow through lower. Later hacks. Oh, there it is. It did not just do that to me. Look at that. That's funny. That is funny. My style was too conservative. But I mean, the what I sort of my commentary is correct. We moved up into resistance. Could not reclaim. So now we're pushing lower to new lows. I can't chase it now. I mean, my entry was up here. So I'm okay missing it. But unless we form some sort of acceptance down here, and then we can get a breakdown, right? My target was going to be for partials, 1R, a little bit under new lows. It's coming down though to that first target. That was a. Why is not showing well? So let's see if it gives that drop, guys. Let's see what's buying Q doing. Yeah, that's the break. I can't chase it now though. Baina is looking for 53.94. That's my main target too. If we can reclaim this 43 area. Yes, it's not doing much. I don't even want to touch ES, guys. That thing is it's at a 20-point range. Bouncing back up. There's no follow through to the downside either. What's the range in ES? 22 points. Back up. Well, 52.94. I have 52.93. We're close. That's that zone you see down here. 52.93. But look, we need to break this support area. We can't break it. We keep, sort of tipping our toes under London's low and then bouncing back up. I was up 3%. Well, financials are up a lot. Well, not a lot, but they're up today. Yes, that's RSI. I just look for divergences if they align with sort of a divergence in delta. Like NQ had this divergence here, and then we saw that push higher, but obviously it failed. But it's good for reversals. We might, yes, is looking more constructive for a breakdown here. We are wedging up. Your SPY, it's just going sideways. It might break here. You guys see that? Just sideways since the open. We're getting a 1, 2, 3, 4, 5, 6, 1, 2, 3, 7. There's a chance we can break. I really like the SPY setup. And that, you know, we failed to reclaim this resistance, this bull bear zone. Let's see if we do break. Let's see if we can form a consolidation here for me to participate in on a breakdown. And go to that 52.93 in ES. Delta in a downtrend. What do we think? Do we think it breaks? I really like how ES looks. Just need to see some acceptance. I have ES and NQ up, or MES and MNQ up. Jim says 5,300 put support. Is this for OPEX? Today's expiration? $5,200 for today's expiration. So we can certainly see that 52.93. It does look like we want to break. I might join you, Faina. We are getting that wedge breakdown. Let me see on the 5-minute. My stop would have to be up here. Let me. Yeah, we are getting that breakdown, right? It looks like it's ready. There it is. I'm gonna see if it can fill me on a bounce. Well, let me look at the bounce first. NQ lower though, that short from up here, I was just a little bit too conservative on my stop, but that's what happens with choppy tape. Let's see if we fail to reclaim here. I'll look for that breakdown short. Actually, the 2-minute. Yeah, the entry for me should have been right at the wedge breakdown. So if we can sort of get a bounce, it looks like it just went lower. Let's see if we can get a consolidation for me to join. I'm gonna have to wait for that. We'll reach just 441. I can see that. We're stepping into scenario 2 here. So the next target is 52.93. If you're in this, ride that to there. I need to look for an entry. Delta, super negative. Nice, Laura. Yeah, that initial short was money here when this 9 MA higher low failed. But it happens, you're going to miss them. We do need to see follow through lower, guys, because we do have 15-minute divergences. So, if we don't hold here and break lower, then it might mean that we are just going to move back up. All right, I'm gonna watch you now for potential breakdown since we are looking like values moving lower. But if we can't sort of create some sort of consolidation here that could confirm rejection, then we're gonna bounce. Essentially, we're creating the lower high here. Lower low, lower high. This lower high needs to be rejected for us to see that continuation lower. So for our first retest, one candle retest was paid like that, new lows. How's this short doing from over here? Just a classic wedge breakdown. I'm waiting for. All right, I need to see that consolidation here, guys. 18,117. Well, we're moving lower to seek that higher low. Hopefully we can build some value here so I can then interact. If it goes, to 93, take those profits or partials at least. Yes, 53.93. That's 715 for NQ. Yeah, trend is down. I need there's no consolidation here for me to join. Dan, are you getting paid? Take those profits, man. All right, 53.93 is 52.93 is coming up. Take partials into there if you're take that short. Oh shoot, what's spot doing? Didn't give me that consolidation here, guys. I couldn't. I know Stowe and Leo like to, on that sort of bounce, they like to short, but it was just not enough of a. I needed something like this to then join. It happens. Let's see what happens when we come down to 52.93 though, because this is the area where we'd be looking at a higher low. So maybe a reversal sets up. A 2R from there. Bummer. Oh well. Short at 53.04, looking for 53.93. Gluxer. I mean, it's coming. That zone is coming. It's coming. There it is. Pay yourselves. I just can't chase it. All right, if we break 93, the next area is 52. 80. NQ coming to those targets I had from that earlier short. All right, initial reaction is sort of bounce this NQ into that 52.55 area. We're finding a low at the moment here now to see how the bounce looks. Good trade, Don. Faina, you got your move. Good trade. Guys are killing it. Let's get some likes up for Ninja, guys. Let's get some likes for the crew working hard. Yeah, let's get some love. We hit first, area of support here. Can we now reverse back up? So here's that move here that we were looking for, or that I was looking for. Scenario one was to hold 53.18. We broke that. 410 broke, and we moved down into this next area of support at 52.93, 52.55 in NQ. Can this be the higher low of that 4-hour wedge that we're forming? If so, we would have to bounce from here and sort of back test that 53.18 or 410 area in NQ. But the tape is still bearish. Didn't really give me an entry. I can't chase this. I need something like this. $200 points. I wouldn't consider 200 points a scalp. That's not a scalp. Thanks, T-Ball. What a name. 200 points is a scalp in NQ. Well, I guess, if you're more of a larger time frame trader, definitely. I think 20 to 30 points is a scalp in NQ for sure. Tape's still bearish. We need to see some sort of reversing structure here, but there's nothing like that yet. There's no reason. There's no structure here at the moment that's signaling potential reversal. Just need to wait for that structure. If we can't hold here, then we're probably going to move down to that 5280 level. Like we continue lower, guys. There's no. You enjoy South Park. We do have our side divergence in ES breaking below that 5293. It's, you know, I can see a dance here taking place. But look, guys, missing moves is part of it, right? I was conservative with my stop up here, which was right. This was the right entry. Sure, the breakdown was the entry, but was a, you know, a continuation entry. However, the breakdown really started when NQ failed to reclaim this. It failed to reclaim that, found resistance, and then it rejected from there. And then into the wedge breakdown, I missed the wedge breakdown. There was no acceptance down here for me to sort of join in what I need. It was sort of just getting in when the back tested. Look, if you got long, you probably took a stop. Random question: if you stream on a private YouTube channel or X with education thoughts, yes, you can check out my X account. I don't have a YouTube. It's at trading_boxes. I share plans there. I share commentary there. No YouTube. Patty says, Chris was right about NQ paying more than ES today. It's weaker. I entered short both at the same time, and the MNQ has doubled the profit of the MES contract. Yeah, absolutely. Look, you want to be short the leading move lower, and you want to be long the name that is leading higher, right? At the open, we saw this breakdown here. And this was the sign that NQ was leading lower right there. So, you know, what do you want to short? Obviously, the one that's weaker. Because you're going to get rewarded. Your capital is going to be, you know, the risk that you put on is going to have a higher multiple in return. All right, so we seem to be holding this 5293. NQ reached that 857 zone. Here's that potential higher low, guys. Let's see if we get a 2-minute reversal. So here's that lower high that we could potentially get. Lower low, lower high, lower low, lower high. But there's no, you know, if we bounce straight up, there's no lower high entry for me. I need that lower high. Like this is, you know, I need that lower high entry to then signal a new start in an uptrend, which would be right here. Right, but this is just seeing a strong bounce. This is moving already up into that 2050 EMA cloud. And I just, that's my entry rule, right? I need that. So if you guys are long from buying these lows, great. I need the structure that'll allow me to consistently over 1,000 trades help me participate in a long, right? Help me manage risk. If not, I don't have an entry. Thanks, Curtis. The plans are on point. Right? So I like to say this, the trade plans that I create are a better trader than me, because that's when there's no bias, that's when there's no emotion, right? So it's my job to show up and execute. But the other layer of that is the planning is there, then the risk management needs to be applied, and certain parameters or requirements need to be met in order for, thanks, Don, in order for myself to be able to manage risk on a trade idea, right? We didn't get the consolidation that I was looking for on this breakdown for me to manage risk on the short, even though I did sort of have the idea that we were going to move lower. And we're not getting that 9 MA lower high here in NQ for me to participate on a reversal back up. So if my entry requirements are not met, I can't participate in this, because what can happen is, because we didn't create a 9 MA lower high, we're just going to bounce up here and then can come back down here. And then at that point, maybe a failed breakdown and then a reversal sets up, right? So it's more about sustainability for me and being able to have the patience to wait for my exact entry rules to be met to then execute. Like I just can't. Yeah, Mark, patience, discipline is so difficult. Look, if I was just buying and selling these, whatever I thought was a good price, I would not be, you know, I would not have been able to do this for this period of time. Would not be able to manage accounts for people, right? Since they trust me with their capital. So I need to wait for that. If my entry rules are not met, it's not my day. Yesterday was my day, right? I had 3 profitable trades back to back. We were just in a wider ping pong area. But then the day before, on Tuesday, was not my day, right? I was flat for Tuesday. Yesterday was a great day. I had a 3.5 R day. So this is bouncing. No, per my entry rules, no 9 MA lower high. We're bouncing into the 20 EMA, which is that 2050 EMA cloud here in red, where resistance is. Can sellers show up there, right, from sort of here to here, and can they drive price lower now? Possibly, even though, you know, or can we create a higher low and then push up, or a lower low and then, it's tough to say. You just have to wait for that structure. But if you're long here, hey, hopefully it bounces back up to that level. I like Mondays. Mondays aren't really an issue for me. I mean, 2 Mondays ago was probably my best day this past quarter. When we had that gap down on Sunday, on Monday, it was a full risk on trade for me. That trader had a good long. It's awesome. We do have 15-minute NQ RSI divergence, which indicates reversal. But there's no entry for me here. I couldn't join you guys. If I were to look for an entry above this candle, that's just too high. And my risk is not the same. Essentially, I'd sort of be looking for sort of a home run when my typical entry on a reversal is somewhere down here into the 9MA in yellow. You can see how that allows me to manage that risk a little bit better. My contract size will be bigger because my risk is smaller. And then into the move into this EMA cloud here, I'm able to take partials, right? But when my entry, or if my entry were to be into that EMA cloud, then you can see how I'm sort of entering at resistance, even though we can break out and continue higher here, right? We can do something like this. Sure, that can happen, but over the long run, there's no success for me in entering in the move towards that EMA cloud, right? My entry needs to be into the 9MA because it is when the 9MA lower low, lower high, lower low, lower high reclaims that we get the breakout, right? So hopefully that makes a little bit more sense as to why I need to wait for that entry, because I'm looking to participate in the reversal of the prior downtrend, and my entry needs to be right around this area. If it's not, then it just has to go without me, right? Because there's going to be other days where I don't take the trade, right? Or I'm waiting for my rules. Price bounces up into the 20 EMA, rejects, and sees a new low. So then at that point, I didn't follow my rules. And then maybe it sets up a new sort of reversal here. And then at that point, I do get my entry and get the move up here, right? And we sort of reclaim this new 9MA lower high. A little bit of a tangent, but it's you know, it's important to wait for your rules. Looks like Dan got that. JD, yeah, it was my biggest trade this quarter, most likely the year. One single day. That was great for you too. That was my biggest dollar wise for the day. They're different sizes. They're large though, Curtis. They're large values. It's multiple people. Sure, that's the value of an account. But I mean, you know, there's 7-figure accounts. Corey. Ninja, show some love for Ninja, guys. Give us a like. I don't day trade futures for clients though. It's for a few select clients I do. But it's mostly swing. I swing trade futures a lot for clients, and mostly day trade for myself and a few. But you know, it's combined, it's 8 figures for sure. What are your thoughts on ICT? Look, I think we've all said it, every host here. There's many different ways to make money in the markets, right? Like some of you guys got the short. I was waiting for my confirmation, didn't happen. Some of you guys got the long. My entry rules were not met, right? ICT or Fibonacci or all these other different structures, it's you know, is it complex? Is it harder? Is it more difficult than it needs to be? I think so. I think, you know, Kane will share that as well. I think Tanya will share that as well. But you know, if it makes money for people, you can't really argue that, right? How hard is this game to master? It's extremely hard, right? And if there's people who are making money consistently through that method, more power to them. Who are we to judge somebody else showing up consistently here, sacrificing what they need to sacrifice to make money in the markets, right? If it's all our dream to be consistently profitable and somebody's doing that, right? To me, it's like, who am I to look down towards that? They're changing their lives. They're changing their lives for their families, right? That's what we're doing for. So we're getting that rejection here. You know, an entry for me up here just did not make sense. Like, I need to wait for that 9 MA lower high entry, and that would be something like this. Let's get to 300 likes, guys. Got around 10 minutes or so. I don't look at gold, Tara. I swing trade it. It's super extended. You know, we're close to seeing a top here soon. I'm not calling a year top or multi-year top, but in this move here, we're close to seeing a top. So now that the 9 MA downtrend has ended, guys, okay, even though we did not get that lower high and we sort of just moved right into that resistance area, the next structure here is that we create a wedge, which will have better confirmation for us if we are, oh, I don't want that. If we are sort of ping-ponging here to create a now lower high, higher low structure. And then at that point, if we are going to reverse and move back into this 410 or 53, 18 in ES, then we should push up higher, right? If not, then we move lower. But, you know, with this tape and OPEX, was this move lower just to seek that higher low? I think so. If you're long, though, if you bought these lows here, I mean, there's just no setup for me here. I have to wait it out. All metals are getting hit. Tracy's informing us. Yeah, gold. Nugget is seeing a big rejection. I agree, Fish. I think at the end of the day, we're all looking at the same thing. We're all looking to participate we're all participating in the same trend. We all have our different rules, our different filters to define trend, right? But if there is yeah, it's all the same thing. You know, when you're creating a system, you sort of have to define how it aligns with your beliefs about money, yourself, how you view the market, Do you view it as inefficient and maybe you want to look for inefficiencies to participate in, like Kane does? Do you see it as a trend following mechanism like I do, right? I come from a swing trading background from managing money. And so I not only believe it, but I've seen it and I've participated in huge trends over the years since 2015. And that's how I view things, right? What specifically don't you like about the trend down continuing? It's not that I don't like it. It's just that the structure we're forming on a 4-hour time frame is a wedging structure. In order for us to see that follow through lower, we will have to break or sort of find acceptance at the support areas where we're sort of bouncing from. Like for me, and it's a if then else. If we get acceptance at the support, then we can get a breakdown. If not, then we're just going to be mean reverting inside. And now we're just sort of moving sideways after holding this zone. Do we, hold and attempt to break out higher to backtest this 53.18 in ES or 410 in NQ? Thanks, Fish. Like seeing you on here, man. I see you on everybody's stream. It's a good group we have here, guys. All right, so good community. Let's get to 300 likes. Show some love for Ninja. Dan, hit that like button. I know you're in there. Don't be selfish, brother. Hit it. Oh, I see Jim.
All right, all right.
Hey, Jim.
Chris, sorry, I was preoccupied. Good job, man. Good job walking us through it.
No worries. Bit of a choppy day. We've got the breakdown lower, and we got that breakdown lower that I shared in the morning, scenario 2. But could this be a higher low now in that sort of larger consolidation we've been in for the last 2 weeks? But I was waiting for my entry rules. They weren't there, and I missed this breakdown. It happens.
Yeah, I mean, I'm a levels guy too, and I love that, that 52.93 you talked about. It's like I'm looking at this wick going, wow.
Yeah, zone to zone, most likely the rest of the day and the last week, really.
Yeah, for sure. Well, hey, listen, thanks for doing this and being with us today. We have a long weekend ahead of us. Hopefully you have some relaxing plans for this long weekend.
You too, all right? You enjoy yourself and take care of yourself in that island of yours that I see you posting all the time.
There'll be more pictures from the island, but then again, all right, thumbs up. Let's hit that, smash that like button for Chris. We will talk to you next week, Chris. Thanks for being here.
All right, Jim. Take care. Take care, guys. Bye.
Oh boy. All right. Well, what a day so far. Very exciting day so far. Appreciate everybody smashing that like button for Chris. We're gonna go get right into some more market analysis, but we have a special guest with us today on this glorious Thursday down here on the island. We have Andre from Edgeful. I'm going to pull him in right away. We'll get started with Andre, and he will be with us right now. So, Andre. No, hang tight one sec, Andre. We're going to do a little shift here and get you front and center next to me. So, hang tight. There we go. How you doing, man?
Good, great. Very happy to be here. Appreciate it as always. Love to speak with you. And how have you been?
Oh, I'm good. I'm always good. Always the same. Just happy
How,
to wake up in the morning and be able to talk markets with all of you fantastic market analysts.
Yeah.
Including yourself, man. So you're down in Miami still, yeah?
Yep, of course. I love it
All
here.
right.
Not planning on leaving anytime soon. I have no intentions. But yeah, it's nice. It is nice to go outside when these markets are as crazy as they are sometimes. Get a little breath of fresh air. I feel very fortunate that I can go outside to some nice weather after some crazy, crazy markets that we've been in.
Yeah, so let's talk about it. I mean, for those of you who don't know, Andre is the CEO and mastermind. I'll use the word mastermind behind the Edgeful.com website. And there's only one L in
Yeah,
Edgeful.
correct.
Um, and it's a stat heavy environment with all sorts of stuff going on the dashboard, and you could set your own queries up and set up some customized studies. It's pretty cool, man. So how is everything going with the analysis?
It's interesting. So one of the difficult parts about markets like this are that headlines can, regardless if you have an A plus setup, if a headline comes out, price will fluctuate and it could take out your stop. It could send your trade into profit, but it can also take out your stop. So what I've been trying to do is be very patient with whatever trades I take. I want to make sure that I'm focusing on the highest quality setups. I'm not oversizing. I'm trying not to overtrade, because when you have a 2% move in the first 15 minutes of the market open, like for example on NQ or ES, it's very out of the ordinary. And when you want to trade, which is, as traders, all of us want repeatable, consistent processes, setups that we can take, markets like this start to shift things around where it's a little bit harder to identify, or maybe the setup you've been taking prior might not be working right now. So for me, the way that I've been trying to navigate these markets is, number one, size down. Number two, be very extra patient, even if that means that I have to literally go outside. And that's why I said that before, is I know myself, and if I'm staring at the screen, it's going to be pretty difficult for me not, after 30 minutes, 40 minutes, 1 hour of not taking a trade, it is going to be a little bit difficult for me not to find something to do. So that's how I've been personally navigating. I'm curious, how have you been dealing with it?
So that's great. That's great advice for sure. I think that's
Yeah,
very wise. And as I enter my dotage, I spend a lot more time, when I walk away, I go out to the garden and do gardening stuff. And
exactly.
I don't know, this is a new thing for me, but I'm starting to like it. But no, you're right. And sometimes it's just not there, period, right? What
Yeah,
I've noticed with the Edgeful stuff, the Edgeful is great because you can go back and you could customize your look back period for any statistic that you guys
yeah,
are publishing.
yeah,
And but you got to keep it in context of the paradigm for that day. And what you just said was, we have these huge moves.
yeah,
So some of the look backs are going to be a little skewed sometimes. So you have
correct.
to put it in perspective, kind of what you're thinking about. I just pulled up the website just really
Yeah,
quickly here. So we look at the gap fill a lot. We look at the initial balance breakout a lot. I'm really liking the initial balance breakout on the London session also, to help
interesting. Yeah,
give me clues pre-market, and it's been really a useful tool for me
yeah,
in particular. And I know you guys are always adding stuff to this thing as well.
yeah,
So I'm interested to hear about that as well.
yeah, of course. One of the things that I'll just touch on regarding the look back period is, a lot of people like to go back 5 years or 10 years or even 20 years sometimes. But in the day trading context, meaning we're in a trade for 15 minutes, for 30 minutes, for an hour, 2 hours, using data from 2005 or 1995 is I mean, in my opinion, I'm not going to say that you can't, it's
Yeah.
completely irrelevant, but I think that it is actually going to skew you in the wrong direction. And the reason for that is, the further back you look, there's a current market environment, the way that the market is trading. And let's just say it's this little sliver right here. The further back you go, the smaller the percentage of the current market environment becomes of the overall sample size you're looking at. So what happens is, you dilute away the current market environment, and then now you're using data from 15 years ago to trade on a 5-minute time frame now. To me, it doesn't make sense. Now, we have the option to go back 5 years. We don't have it further back for this specific reason. But for the traders who want a bigger sample size, you can do that. You can, and the flip side of that is you can also go to 1 month. And some people might think that is absolutely ludicrous. It's up to your opinion. It's up to whatever, however you want to look. But the recent month has been very different from the prior 6 months. So it actually doesn't hurt to go to that recent month if you want to see what that's like, because the results may change pretty drastically.
Yeah, that's great. I agree with that. Now, I'm going to throw one little asterisk there. So eventually, the dust is going to settle.
Yes.
Maybe it's going to take all 85 days or however many days are left before the big tariff deadline. I don't know.
Yeah.
But the dust is going to settle eventually, and we are going to get into some normal ranges and some normal
100%.
market behavior based on
Of
the
course.
fundamentals, CPI and jobless claims and all that, and unemployment. And then in those cases, though, I would look at both, right? So I'm going to go back and look at. I just pulled up a 1 month as an example for the gap fill. But I will also go back and look at a longer time frame as well, because now, okay, I don't expect any crazy news anymore. Everything's kind of settled down. It's back to normal, and these stats actually could be helpful.
Yeah, no, absolutely. And I 100% agree with that. And personally, for me, the way that I like to do it is I like to go on the high end, the 1 year, and then I like to look at the 6 month and then the 3 month. And what I like to look for specifically when I do that comparison of the three is, are they all in line? So let's pretend that the 1 year, the result on any report, let's say the initial balance is 80%. The 6 month, it's 82%. The 3 month, it's 79%. To me, that means it's very consistent. And that gives me more confidence to take that setup when I see it. It gives me more confidence in the data because it's very consistent over the course of a year. Whereas if you go to the 1 year and it's at 70%, or let's just say 80%, then the 6 month is at 65, and then the 3 month is at 50. That gives me a lot less confidence to say, you know what, maybe this isn't in this current market environment right now, it's not working as well. I might take a step back, or I might need to add another layer of confluence to this in order to use this data. And that the trend of how the data changes is important for me. And that's why I personally will always go to the 1 year, 6 month, and 3 month.
Yeah, that's right. I like that. I like that. Now it takes a lot of brain power because you got to look at three different things, but
yes,
it's worth it. The other thing that
sure.
I was playing around with, especially last week when we had those crazy candles, and it does it in days where it's like, all right, there's an overnight gap up or most likely overnight gap down in the equity market as an example, and I'm like, all right, we're never going to fill this gap today. It would be, we're below my VWAP. We have some gamma levels down low. It just doesn't seem to be something that is going to happen just from a common sense point of view. So, and then plus all my other indicators. So so just let's take this gap fill report as an example again. When I go down to customize, then I can set my fill percentage. Right.
Yes.
So let's say I have a key level 25% up toward that gap fill. I could just change this to 25%. Whatever it is. You have 5% increments, and then save that, and then the report gives me the stats again. I think I just froze my computer. It'll pop up here in a second. But there we go.
Yep, there it is.
So now all of a sudden it's like, aha. Now we're seeing some statistics on a look back that are consistent with what I'm seeing with my levels on my chart. And it gives me a guideline like, all right, so are we gonna, we gap down. If I want to get back, 25% of the way toward that gap, we have a 76% filled record, look back. And so I'm like, okay, this makes more sense now. So now I could position my trade the way I want it.
Exactly. And this is such an important way to kind of tinker with the data a little bit. And for anyone who's new that's not aware of what Edgeful does, is there's zero opinions in here. It's not my opinion. I'm the CEO, I'm the founder of the company. There's None of my opinion is in here. It is all historical facts. This is all historical data. There's no financial advice in here. There's no buy or sell signals. There's nothing in here. And this is such a great example, exactly what you just did, of tinkering the settings to extract more value out of this report. So yes, your profit targets will be further in, or sorry, closer in, and you can actually have data-backed levels to start to target because you just changed from 100% gap fill to a 25%. And you can make it whatever you want, but this is such a great way of even changing like the orb timeframes, the IB timeframes, any of that stuff. There's a ton of customizations, but it really is the way that we like to say it is like your personal financial analyst. This is your little quant that you have in your pocket to say, I want to look at any instrument across any session, across 5-year look back, with customizations, and then this is the way that you specifically, like you just did, can customize it to your trading style.
Absolutely. Yeah. And just to kind of what you just mentioned, I just want to point out for everybody, when you could choose a session as an example, and you could run the stats on, the New York session. This is regular trading hours for New York, regular trading hours for London, Asia, and you could, econ news, or even create a custom session.
Correct.
So yeah, so as I kind of get deeper and deeper into this, and I'm kind of developing my own thing I take a peek at, I want to experiment with all of these. It's really easy to do. The query happens fast, and it's pops you up right away, and it gives us the ability to do that customization that you were just talking about.
Yeah, I'd love to show you something if I can share my screen for a second.
Yeah,
I'd love to
let's
show
do
you
it.
something. I just pulled up my screen here, and just can you see that okay?
Yeah.
Perfect. All right, perfect. So in this case, what we're looking at here, and this is really where it's going to help you intraday, is the screener. It's right here on the top. It's kind of towards the end here. It's called the screener. What this does is it uses live data fed through the reports to tell you what's actually happening right now. Now, I have my personal screener set to include stocks and futures. And what I like to do is have the Mag 7, QQQ SPY, and then ES, NQ, YM, RTY. So the major market movers, the major indices on the future side, and then the major market movers on the equity side. So I have 13 total tickers in here. And then the way that this works is we have 4 different reports that you can put on here. So for me, what I like to do is I like to do the opening candle continuation, which I'll explain what these are in a second. I'm just going to name them first. Opening candle continuation, IB by rejection, the initial balance by rejection, initial balance standard, and then the previous day's range. So what I want to highlight here is this column right here. Based on the opening candle continuation report, which I'll explain in a second, all of the tickers except RTY are bearish today. Scrolling down to the IB by rejection, all of these tickers are bearish except Netflix and RTY. Scrolling down again, initial balance, all of the tickers are bearish except Netflix, hasn't broken out of the IB yet. Going down to previous day's range, this one is neutral because price hasn't broken out of previous day's range yet, or if it does or doesn't, we don't know. But overall, we can see that the major market movers and the major indices are all bearish. And this updates obviously live throughout the day. It updates every single day. So I like to have this up like on the side of my screens while I'm trading to see, you know what, if I start to chase a long entry, I take a step back and I'm like, well, all the major market movers are bearish right now. Am I going to scalp along, which is fine, but I just need to understand that I'm going against the overall data today, or right now at least.
Totally
seen
makes
this?
sense. I have, but I haven't spent time with it yet, which I'm embarrassed to say, but I will now.
No worries. I know that there's a lot in here, which is obviously great for the users, but I'd love to touch on what these reports actually do. And the opening candle continuation is one of the most popular ones right now. It's a very interesting report. So I have it up here on ES in the last 6 months. And pretty much what this one does, super simple. And honestly, the results are pretty shocking. if you look at every time the first hour of the session from 9:30 to 10:30 is green, which is this bar right over here, the one on the left, 76% of the time in the last 6 months, the day has actually closed green. If that first hour is red, 69% of the time, the day has closed red. So now that first hour gives me such a strong bias for the rest of the day, because I know that in the last 6 months, almost 77% of the time, the day will close. In the case where it's green, the day has closed green. In the case where it's red, the day has closed red. And
Yeah,
that screener,
and so
go ahead.
yeah, just let me interrupt because that's
Sure.
particularly important in a non like breakout trend day, right? Because in a regular day, you're going to be closer to unched on the day
Yeah,
than some of the days we saw last week where it's like, all right, fine, we're going to close green, but we're going to close red, but I'm not going to, I can't put my stop at break it unchanged because it's too far away.
correct. Yep. And 100, that's a great point. And one of the things that I like to do is just because you can't necessarily take a setup with this specifically. There's no setup that you can take based on this specific report alone. But what this helps me do is understand my bias for the day, understand the direction, which when I was a beginner trader, that was one of the things that I struggled with most, is should I be bullish or should I be bearish today? I'm not sure. And instead of guessing or instead of going based on what you see in the news or whatever else, I like to use data to determine where my levels are, where I want price to stay below this area, or I want price to stay above it, or I'm expecting price to retrace here because X amount of time in the last 6 months, that's what happened. And in this case, for this is another thing that you add as confluence. A very simple, a very easy report to understand that has very strong data. And then even if we go to NQ here, know that NQ is extremely popular. It's even the correlation is stronger. So in the last 6 months, if that first hour is green, over 80% of the time the day has closed green. If that first hour is red, 77% of the time the day has closed red. So you're trading ES, you're trading NQ, and we have all of all the different tickers, like literally whatever it is. If we don't have it, we can add it. So you can just send us a message and we'll add it in. But this is such a strong report, and it's actually funny that a user requested this report. So we do take requests. So you can customize. So as you mentioned before, you can request a certain query, and as part of the plan, we will build these out for you. So this was a user request, and now it's become one of the most popular reports. But it's one of my favorites in terms of confluence and overall bias for the day.
Yeah, and so when I think about this, at least for me, this is how I am. I have belief perseverance, which is a bias, right? It's a cognitive bias. I believe something is going to happen. It's just what I think, right? It's not based on
Yeah,
anything. I don't know. This is what I think based on my experience or whatever.
yeah,
Just because it's based on your experience doesn't make it true. So that belief perseverance now that I might have, I could take a look at this report and say, okay, so look at the stats here. Maybe I should not be thinking this way when I come up with my trade plan, my trade
yeah,
idea, because what this is telling me, it's just hitting me right in the face. It's like, boom, Jim, what are you thinking? And so and yeah, there's that small chance that I'm right, but why, but why? Why bother? Why do that?
yeah, yeah. And that's one of the things that we've heard in terms of feedback from our users it is like quoting, it has helped me stay out of so many bad trades that I would have taken because I didn't know the data. I didn't know the actual probability. I didn't know that I was fighting an 81% historical
Yeah.
piece, like a result here.
Yeah.
And this is something that helps me, even if I'm scalping in a certain direction. This is something that I can say, you know what, I'm not going to go for a home run. Let's just say that the first hour was red today, or whatever it is. Let's say I'm fighting this data, and I'm not going to set my profit targets very far away because I know that I need to scalp this. If I see a good long opportunity, if I see some momentum and I want to catch it really quickly, that's something that I can say, you know what, I'm not going to hold this for the rest of the day because historically this is counter trend. or just opposing what the historical data shows. And that allows me to also be able to set realistic expectations if I am fighting that trend.
Absolutely. Yeah,
Yeah.
I love it. I love it for
Yeah.
sure. Let's talk about some of the other reports though, right? So
Sure. Yeah, of
what's your next
course.
favorite? What's your next favorite report on here?
The one that honestly has become one of the most popular just because the data has been so strong recently in this current market environment is the initial balance. So pretty much for anyone who doesn't know, the initial balance is the high and the low of the first hour. So 9:30 to 10:30 Eastern time, whatever that range is, that is the initial balance. And what this report measures is how often does price break out to one side, which is this blue section. So only breaking out to the top or the bottom. How often does it break out of both sides, which you can see here is black one, which is only 12% of the time. And then how often does it not break out of either side, which is only 2% of the time in the last 6 months. So this 85% is such a strong bias for me, at least. If it breaks out of the high, I do not want to expect it to reverse back down and break the low, the IB low. And in this case, when you start to pair this with the opening candle continuation report, let's say the opening candle is green and price breaks out to the IB high. Now we have two reports that are very, very strong, north of 70, 75%. This one is over 85%. Now we have a very strong confluence to be bullish today. So now being short starts to make less and less sense to me. I'm curious what you think about that.
No, I agree, and I take this to the next level. You might not know this, but on my charts every day, I show the initial balance,
Yeah,
both for the London Open and for the U.S. Open.
yeah,
And sometimes there's confluence between the two, sometimes there's not. And when there is, then it's like, all right, that's a double dose of reality for me, and
exactly.
that makes it strong. We do
Yeah,
have a question though in the
sure.
chat. Do the sub reports include if price stayed above the break of the orb IB ETC?
So the way that this one works is we have a by close variant, and I'm going to go to it right now. So a sub report, just so everyone knows, is just a filter or a variant of the overall report. So we have an initial bounce report, and we have all of these little sub reports here. So if we go to the by close, what this is going to do, and let me just make sure my settings are okay. So we go to the buy close, and now this is telling you, does price typically close above the IB high, within the IB range, or below the IB low? So this is considering every single initial bounce. What I like to do, as we talked about before, customizations, I like to go to my customization, and let's just pretend that today did break out to the top side. Right over here, this allows you to filter only for days that broke out to the top side. So if you click on that, breakout days, click save, give it a second, and then now you can see how often, only on breakout days, so obviously naturally this has to be 0 because it didn't touch the IB low, 63% of the time price on a day will close above that IB high. And then only 36% of the time it's closed within the IB range. So that helps you set the expectation, and specifically what this is pulling is that 4 p.m. close, that the regular trading hours, whatever session you have selected, if you have the London, it's the 11 a.m., the New York is 4 p.m. And then here you can see you want to expect some sort of continuation because 63% of the time it will close above that IB high. Now, it doesn't mean that it can't pull back in, obviously, but what you want to expect is that continuation to the top side. You don't want to expect it to just consolidate inside of the IB range for the most part. There obviously will be days where that happens, but for the most part, you should not expect that. And then you can also filter for the breakdown days. So let's just say price breaks to the downside of the IB today. You want to have an understanding of where it can close. Go to the breakdown, click save. And now you can see it's actually a little bit higher that it will close within the IB range, but 60% of the time it's going to close below that IB low. So even just taking a step back for a second, we mentioned before that 85% of the time, it's only going to break one side. Now we're telling you that it's going to break one side. So whether that's the top side or the bottom side, now we can go to the buy close variant of the buy close sub report and determine pretty much we wait for the first side to break. Now we can filter this to say, okay, it's broken out to the top side. I'm 85% of the 85% of the time it's only going to break to the top side. And then now I can see that 60% of the time, or actually I need to change this, but 63% of the time, price is going to close above this level. And that gives me more confidence to have a bullish bias. Again, reinforcing that bullish bias, adding in these layers of confluence to not be on the wrong side of the trade. Does that make sense? I know I just kind of spoke a lot
No.
there.
I'm totally following you. And
Yeah.
it's this is particularly good when you do have a kind of a big breakout one way or the other. And,
Yeah.
you always have this, not always, a lot of times you have this retracement back, right? This
Yes.
reversion back. And it's a mystery to me. Sometimes it's like, all right, are we gonna, retrace back into the initial balance or opening range or not? And so, this kind of stat, again, would help with that bias to kind of think it through.
For sure. And funny enough, we do have a report for that to tell you how far back into the IB price will typically go. Now it's called the buy retracement sub report, and I know I need to change some of these customizations quickly. I was experimenting with some stuff, but so what this report does is it actually measures. So we have it broken out by two separate days. We have it broken out only to the days that break to the top side over here, and then only days that break to the bottom side over here. So the one on the left is the bullish days, the one on the right are the bearish days. And you can see that right here, break down and break out.
Mm-hmm.
And what this report does is it says after price breaks out, the first candle that breaks out to the top side of the IB, how far back into the IB will it go? And you can see this is the 25% retracement back into the range. Here's the 50% retracement back into the range. That's the midline of the initial balance. And then the 75% retracement. So how do you use this as a trader? Once price breaks out, typically you don't want to buy the breakout because you know that 65% of the time it will retrace 25% back into the orb, to the IB. So what is a higher or what you're doing in this case would be limiting your drawdown is entering further back in, expecting a continuation after that. Does that make sense?
Yeah, so you're waiting for the pullback that you expect to
Correct.
happen. Maybe
Exactly.
it doesn't. Maybe it doesn't happen, but most likely it'll happen. And then
Yeah,
you wait for that pullback, and then you end up with a better entry
correct.
than you would have had on the initial breakout entry.
Exactly. And then the other piece that I like to use this is keep in mind that this is only looking at the breakout days. So this is not considering double break days. It's not considering no break days, obviously. And then what you'll notice is that if you look at the breakout days, those bullish days that you want to take advantage of, this black box here is the 50% retracement. Only 31% of the time on a breakout day, on a bullish day that we want to trade, has price retraced back down to that 31% without breaking the other side. Sorry, to the 50% without breaking the other side. Which means to me, and this is the way that I interpret it, people have different interpretations, but if price starts to cross back below that 50% line, I am not as interested in this trade anymore. This is a great area that starts to invalidate my bullish thesis. Because, and if you look at an even more extreme example here, is if you look at the 75% retracement, only 20% of the time of all of the breakout days has price retraced all the way back down and then bounced and then not touched that other side of the IB. So
yeah, and depending on your entry, and for me, this gives me stop levels, right? All right, I'm wrong. We hit
100%.
that. Yeah.
100%. That's the way that I use this. And that's a great, the intuition there is great because this is how, I mean, I never tell people how to use it because it's up to everyone's interpretation, but this is one of the ways that I use it. And I think that these two levels are great places to invalidate your trades and therefore a great area to put your stops. So your entry can be determined by the blue bar, and your stops can be determined by these black and gray bars. And then this is where you can start to have data-backed levels rather than an arbitrary R multiple, rather than like just saying, hey, I want to risk $1,000 or I want to risk $500 or whatever it is. You can start to say, I'm going to use this data-backed level to put my stop behind and say, if price goes here, my idea is invalidated. I'm not going based on my account size. I'm not going based on the P&L drawdown. I'm going based off of where my trade idea is actually invalidated, which in my opinion is the way to place your stops as well as your targets.
Totally makes sense. Totally makes
Yeah.
sense. We have Billy Joe, not to be confused with Billy Joel. Thanks for being here, Billy. I would love to see a report for retracement to IB percent from New York market close to New York market open. Use it for planning overnight trades. So there's one for the suggestion box.
Yes. So what I would recommend is if you go down here to the little support button, if you click on that, what you're going to see is this pop-up. If you click on build a custom report, you can actually submit the information. What I recommend and what's actually required in order for us to do this is if you take annotated screenshots. So plot out the IB that you want to look at, take a screenshot of it, put all the arrows, put all the explanation on there, and then we will process that internally. We'll review it. We'll see if we can do it. One of the really important criteria is that we do not do anything that is subjective. Obviously, like I mentioned before, there's no opinions in here. There is no, well, I think that this is a bounce and I think that that is a bounce. This is the lower high or that's the lower high. Like we don't do any of that. It's black and white. Did it touch the 25% retracement? Did it touch the 50% retracement? Yes or no. That is the way that we like to do it because it takes all of the questions out of any of this data. So if you submit that, we can take a look at it, and that's where you can just do that right over here on the side. We
All
also
right, Billy, and
have, by the way, sorry, go
I
ahead.
just want to say, Billy, we'll dig into it if you've already submitted that. We'll check it out.
Yeah. And we do have an overnight range breakout report. And what this one does, and I'll just type this in, overnight range breakout. And what this one does is if you take the overnight range, how often does price break out of that range? So imagine it's very similar to the IB concept, but what you're going to see is instead of using the first hour of the session, you're using the overnight session. So that's from 4 p.m. to 9:30. It's the entire session outside of the typical RTH New York session. And what you can see is that for NQ, 70% of the time in the last 6 months, price has only broken out to one side of the overnight range. So again, very similar concept. If price breaks out to the top side, you don't typically want to expect it to break the opposite side. Now, in the times of higher volatility, like we're in recently, it might do it. But the important piece is that when you see a stat that looks like this, 70%, 85%, whatever, even sometimes 90%, by definition, if something happens 90% of the time, it does not happen 10% of the time. This is something that a lot of people, they see the 90% and they think, oh, it's a guarantee. And that's obviously not the case.
Yeah.
The 10, you don't want to risk your entire account taking a trade because the historical data says 90%, because today might be the 10. So you still have to be very responsible no matter how strong the data is, because today might unfortunately be part of the opposite end. And that's super important just in terms of risk management, because obviously a lot of people get very excited about these high probabilities, which are obviously these are great, but the risk management is still very important. You can't risk your whole account on one trade. These things play out over 20, 30, 40 trades.
Yeah, no, I know. It's funny. It's I don't know if it was yesterday or the day before. I pulled the Green Day Red Day report, right? And it was supposed to be a overwhelming Green Day at 78% or something like that. And I was like,
I don't
maybe
know.
not today. Yeah, so
Yeah.
that's I experienced that firsthand. It's like, all right, wait a second. No, that's not going to happen.
Yeah. And that's the important piece, that you should, no matter how good the setup is, it doesn't matter if 1,000 things are falling in line, you do not want to risk your account on one trade. As traders, we're here for the long term. We're not here to try to make $1 million overnight. We're here to get consistent profits. And something that a lot of people don't really think about too often, or at least not that I hear, is that they're not willing to take a $200 winner or a $300 winner or $400 winner. Like if you make on average, your profits are $400 a day, it's roughly $100,000 a year. And so there's 250 trading days times $400, $100,000. But $400, when people see it on their P&L, they're like, oh, it's not enough. I want 5,000.
Yeah.
And not realizing that the consistency is what gets you to those bigger P&Ls and what allows your P&L curve to rise nicely and smoothly, rather than being these sharp gyrations, which are, oh, you hit a home run, you got lucky, and then you blew your account the next day, and then you hit another home run 2 weeks later. There's no consistency there. And that's where being responsible with your position size and your risk, when you see something like 70%, when you see something like 85%, is super important, because as a trader, you want to be here for the long term.
Yeah, I mean, this is the most boring and the hardest job you could have, right?
Yeah.
It's a lot of waiting, a lot of hands in the pocket,
Yeah.
hard to do, but it's not the glamorous kind of, hey, I'm gonna go hop in my Ferrari, get a cup of coffee, come back, and see how much money I made. That's a red flag on the field.
Exactly, for sure. And this is one of the important pieces. Is one of the ways. This is something that I heard. I don't remember where I heard it. I wish I did. But when I was trying to learn about a lot about trading psychology, one of the things I heard was, and this is mostly towards beginner traders, or I mean, people like in their first few months or in their first year, where they think that you're going to make it overnight in the first year. Like there's a lot that you need to learn. There's a lot of lessons that you have to learn. Unfortunately, I wish it was different, obviously, but it's just part of the deal. But really, it's about, this is the framework that I heard, is how much money are you willing to lose before you stop breaking your rules? So every time you break your rules, it's going to cost you money. Even if you win, even if you have a winning trade, what happens if you break your rules and you have a winning trade? That's actually, I think, the worst case scenario, because what happens is you build the bad habits to say, you know what, I did it yesterday, it worked, I'm going to do it again today, and it doesn't work, and then now you risk a lot more. It's a downward spiral. So
Yeah,
the way that I like
being lucky is not a trade strategy.
Correct. Exactly. The way that I like to think about it, and this is what I tell all of our users, is how much money are you willing to lose before you start to listen to your rules? And that's it. Everyone has a number. Everyone has a number. There will be a point where you get fed up of losing. Whatever that number is, it could be 50,000, it could be 5,000, it could be 500. It doesn't matter. Whatever that number is for you is the number that once you pass that, and you'll really start to feel it once you start to get close to it, of like, you know what, I can't keep doing this. I need to start following my rules. I need to be able to sit on my hands. And if you literally have to go outside, or you have to step away physically from your computer, then step away. Because you have the tools here. You have live streams like this one that we're on right now, with amazing traders that are giving you the information. You have tools like Edgeful. You have amazing journals that you can use. You have amazing brokers that you can use. All the resources are there for people to succeed, and it's just about like actually executing on the things that you should be doing.
Yeah, we got a question from the Happy Crab I want to share with you.
Perfect.
Are there reports for stats on days like FOMC, non-farm payroll, et cetera, et cetera?
We do, actually. We have an FOMC report. We're actually going to create this report for a bunch of other, and I'm going to go to this one specifically. So I'm looking at the average results sub-report here, and I'm sorry, we need to fix the little label on here, but pretty much what this does. This is for FOMC. We're going to add it for NFP and CPI. But what this does is it takes every single day of FOMC in the last 6 months. So even if we go back, let's just do a year, because there aren't too many FOMC days here. Every day of FOMC, and it breaks it out into 15-minute increments. And what you can see here, what I'm starting out with, is the positive initial reaction. This means that we're taking the 2 p.m. candle on the 15-minute time frame. If that's green, that gets grouped into this bucket, this positive initial reaction. If that 15-minute candle is red, that gets put into the negative initial reaction bucket. So we're separating the 2 days. into positive and negative initial reactions. Now, what you'll notice specifically on NQ in the last year is that if that 2 p.m. candle is green, typically you're going to see some continuation until Powell is done speaking. So that initial candle is green. Obviously, that doesn't mean long as soon as the candle closes. Naturally, that goes without saying. But the inverse seems to be true for the negative reactions. So this data has obviously changed, but in this case, you can see that at 2 p.m. when the decision comes out, for all the days where price fell, by the time Powell starts to come out, there will be a bounce. So there's a different expectation for an FOMC day when the initial reaction was positive versus negative. So you can't trade them the same. And that's based on the data. That's not based on my opinion, obviously. Personally, I don't trade FOMC. I like to trade where there's a little more structure. I don't like to trade like I don't like to trade through news, but in this case, this is what you can use as kind of a guideline of, let me wait for the first 15 minutes from 2 to 2:15. If that candle is green, my expectation for the next hour or so is going to be bullish.
Yeah, I mean, this is great stuff. We'd love to see it I'll give you a non-farm payroll would be good.
Yeah.
And I think that's been mentioned in the chat. There's probably a handful of them that are good.
Yeah.
For this kind of
CPI, NFP.
Yeah, you got it. But thank you for picking up that question. That's an awesome report as well.
Yeah.
So
Yeah.
we got a couple minutes left here. Anything else you want to highlight before we end our session?
Yeah, I mean, even in terms of more kind of navigating these markets, there's a lot that you can look at. Honestly, one of the biggest things that I've been trying to do is be very patient. I want to make sure that I'm sticking to the high probability setups. I want to make sure that I'm aligning with the bias of the day. And this is where my screener comes in. This is obviously all using live data. This is filtering throughout the reports that we have. So again, for anyone who's come in recently, the Edgeful screener filters all the tickers through the reports that we have. So overall, the data shows today for the Mag 7 plus the major indices that my bias is bearish for the opening candle continuation report. My bias is bearish for the IB buy rejection. My bias is bearish for IB standard. And then price hasn't broken out of the previous day's range yet. So this report specifically hasn't determined the bias. Go ahead.
Go ahead. I'm sorry. No, continue. I got one more question for you, but go ahead, finish your thought.
Sure. I was just going to say, in uncertain times, you can lean on the data to help you, to guide you in what direction to go in. So if you're not really sure, just refer to the data and say, you know what, these things are saying short or bearish bias for the day. I'm not going to try to go long. And if I don't see a short entry, I'm going to sit back. And that kind of takes the emotional piece out of it.
Totally makes sense. So
yeah,
this question is perfect. The timing's perfect for this because we're about to jump into the hot commodity section with Shai. But the question was, do you provide stats for basically what futures markets for agricultures also, agricultural futures?
So we have, I'm just going to scroll like a little bit slowly down here, but we have everything. We have the oil, ES, the DAX, Eurobond, the FTSE, gold, cattle, lean hog, copper. I mean, as I go through, I don't think that there's anything that we don't have in here. And if there is something that we don't have, like we have palladium, we have platinum, we have silver, we have gold, obviously we have gold. We have YM, we have ZB, which I know a lot is actually pretty popular. Soybean, we have wheat. I mean, not that I personally
there we go.
We have it. And if we don't have it, you can just send us a message over here and you can just say, hey, can you add this? And we'll get it added in there.
That's awesome. Well, I appreciate your time today. Hopefully you're going to have a nice, relaxing, long weekend for the holiday.
Yep, for sure. Going to be working, but that's how it is, right?
Oh, man. All right. Well, thanks again, Andre Edgeful, everybody. It's 1L, edgeful.com. Check it out if you get a chance. We're going to go ahead and move into our hot commodities segment with Shai back at headquarters. Shai, good morning.
Hey, how are you today?
I'm doing pretty good. I'm excited about the long weekend because I get to see mom and dad Cags. I don't get to see them that often anymore, so I'll be ready to go tomorrow
Oh,
morning.
sweet. Right on. Well, we got some movers today in hot commodities. So let's check it out. Let's start with crude. Crude on the move today. Once again, we're up $1.84. We are coming up on my levels. I have 63.64 just hit my level. Above that, I have 65.31, and then above that, I have 66.14. I know you have Pax's levels in there, but not mine. So I just thought I would tell you what they are. But again, you know, these two moves down, those big moves down, that left a lot to be desired in the volume profile. A lot of empty space, a lot of numbers didn't trade in there. And so, again, I wanted this to go back and kind of fill that in. So it looks like it's doing that. On the fundamental side, really this market is trying to get excited over possible trade deals. We had, again, we talked about this morning. We had Japan come out or Trump come out and say that talks were going well with Japan. They're meeting again with Japan. And then he also had a productive call with the president of Mexico today. So, you know, I think crude's trying to get excited. Also on the fundamental side, this market was very short. And so, you know, any kind of move higher, it kind of creates somewhat of a short squeeze just because literally sentiment was so poor and positioning was so short. And so if we get over, I think we could really see a squeeze if we get over that 66.14 area, but we'll take it one day at a time here. But we're looking good. You know, we had several attempts. It looked like it might have could have fallen out of bed, but instead we're making a move higher. So what are you seeing on the technical side?
Before I launch into that, quick question: is the sanctions on Iran an old headline, or is this a new one? Additional sanctions.
That was from yesterday. Additional sanctions on a Chinese teapot refiner that was importing oil from Iran. To be honest, China doesn't believe in unilateral sanctions. They don't really care. So to be honest, that one's kind of more of a see I'm doing something, but knowing it doesn't really mean anything. So they sanctioned a Chinese teapot refiner and 4 ships that were already red flagged.
Very awesome. All right, thank you for that. On the daily chart, you know, I had my roughly drawn triangle. We broke out to the upside. We're trading firmly above that 8 EMA. That's my gold line right there. We're tracking almost to the 21 EMA. We're above that 50% retracement, which is approximately 63.70 right now. So this is a strong move up for whatever reason. You know, there probably was some short covering also in addition to the squeeze. But this on a daily is looking like it's moving up. We do have most notably this stochastic crossover, and both of these lines are angling up. So that's a little bit bullish as well. And just to kind of drill into a 10-minute really quickly to see some gamma numbers. If it's actually off my monitor now. It's the prices are on my wall. Oh, there we go. We're we're literally, you know, R1, we blew through R1, we blew through buying spot 2, we blew through zero DTE gamma walls. All of our milestones we just achieved and kept going and kept going. So on an intraday chart, there's no retracement yet. This looks like we're going to settle pretty far north here in a high 63 handle is what I'm thinking.
So that Sheffield put at 55 is still holding. Let's move on to gold. We had a huge move up yesterday. We're down today $35, but you know, this market's taking a little breather. Again, I think this is on kind of a little bit of trade deal hopium. We're taking a little pause here, but to me, that's healthy for the market. I'm still, the chart still looks bullish. I wouldn't really try, I would be trying to buy dips rather than, sell the rips still in this market. But the chatter is that this is on trade deal hope.
Yeah, that's a great observation. I mean, I feel the same way. I feel like this, not only that, I'm thinking, well, maybe there is some profit taking going on. Maybe I don't want to have a position going on the weekend because, hey, we haven't had any bad news today, and maybe we won't get any bad news this weekend. So there's a little bit of hope there with the holidays coming around. But my all of my targets on my fib extension have been hit right now. Just kind of a regular retracement we're seeing from a technical point of view. Stochastics, yeah, a little bit overbought, and we're starting, but it's still flatlined. It's sideways, and it could stay here for a long period of time. So be careful with that. On a intraday chart, we still have some lines in play here. If there's going to be any movement the rest of the day or not, I don't know. But a really nice level of support at that 3,300 level. That's where Jax 1 is, and that's where that 1-day min is as well. So it's a pretty powerful level of support right here. I'd be surprised if we actually had a candle close below it today. And recently on the top, recently meaning the last couple hours, the pivot is actually holding nicely as an area of resistance. And we also have call resistance 0 DTE and gamma wall 0 DTE right there. And that's at 33.20. So that seems to be framing the conversation for the rest of the afternoon in gold.
So we'll see. And gold does close, well, settle is at 130, but obviously the market still trades 23 hours a day. But that, just a reminder, everybody, generally we have extended holiday hours for CME Group for futures. Tomorrow is closed, so they will have their regular holiday schedule where the market's open but closes early. So markets are closed. They close tonight at 4 p.m. and don't reopen until Sunday evening. So just as a reminder for everybody.
That's a great comment because a lot of the holidays you have that weird half a day, right? It's like, oh, we're going to trade anyway till noon or something like that, but not this holiday. I think this one and Christmas might be the only ones.
Yep, it is. So let's move on to wheat. Let's throw a new one in there, just for fun.
Uh-oh. Let's do it.
Wheat's a little crazy, but it's having a pretty good week this week. Again, surprisingly, we talked about this with corn and soybeans, but wheat generally is the laggard of them all and kind of runs to its own beat, so to speak. But this market is looking pretty solid. It's having a decent week, and it's still lagging corn and soybeans, but it looks like it's starting to get a little excited about maybe this farm bill and the extra financing that is going to come along for farmers as well.
Yeah, I mean, on a daily chart, this is, ever since we hit this peak low here back in April 4th, it's been kind of an really nice orderly rally up. The 8 EMA is touching the 21 EMA right now, signaling a potential crossover, which could suggest more bullish activity here in this market. I do have a rectangle up here kind of defining a short-term area resistance, and that's at 555 3/4. The stochastics are not overbought, but they are arcing upward. There's separation between the two lines, which I think is a good thing. So right now it's looking pretty good. Can we close into this rectangle up here is going to be my next question from a longer term point of view. On an intraday, the volume profile, forget about it. We do have that Jax level though at 55 even, not surprising. So that's kind of the story of the wheat market going into the weekend.
Yeah, and for day traders, this market moves intraday a lot. So another market to look at in the commodities if you like stuff that moves. This definitely has some of the bigger intraday moves out of all of the grains. Let's move to 6C. Again, I know it's a currency, not a commodity, but it is a commodity currency. So, which is the loonie CAD. So it is, it's making moves higher. You know, we had that low at 67. It looked like it was just going to completely fall out of bed. It has enjoyed a little bit of an uplift because the dollar has come down, but I really think the story behind this is larger commodity exports from Canada right now. Of course, a little bit of the dollar, and their extra crude that is making it to market to Asia. So they built a new pipeline, and now we're just starting to see a pipeline to the west, so they didn't have to entirely depend on the United States. And we're starting to see orders come in, you know, over the last couple of months. And so I think that is also helping them.
Yeah, it makes sense. The amazing thing here is the central bank rate at 2.75. You know, they've had 7 cuts, continuous, almost 25 basis point cuts. Their next meeting is June 4th, and that's a pretty big. I meant to ask you. I think it's pretty big, but do you think it's a pretty big rate differential between our Fed funds rate and their central bank rate?
Well, yeah. I mean, it is, and I think that, it is. I think what's gonna. I think they likely will cut because of the tariff situation and because of the trade imbalance, right? And their market is looking a lot weaker. Their housing market and their employment data is looking a lot weaker than the U.S. is.
Totally makes sense. Totally makes sense. We'll keep an eye on that for the June meeting. So all the moving averages are just you know, just launching themselves further north. We do have an area right now, 5-day area of resistance, which starts approximately spot 72, 724. We'll just call it that, where my crosshairs is right now. But we're closing at the top of that. If this was the close of this candle, we're closing at the top of that range, which I think is bullish going forward. The stochastics right now are still pretty, yeah, they're overbought, but it's sideways again. This is another example of a sideways overbought stochastics. We could stay there for a long period of time. And going back to the Loonies intraday chart, and by the way, I have a neighbor, their last name is seriously the Loonies, but that's a whole nother conversation. Just kind of looking at the daily chart here, the volume profile is not that bad, actually. Point of control is a little bit in the rear view mirror. We really haven't escaped the initial balance, low and high, with the exception of one candle right now. So I expect us to kind of settle somewhere where we're at right now. We'll see if we could try to get a new top. Previous sessions highs are right there. I mean, 72.40, give or take. Jack's one's maybe not achievable today unless there's some kind of news. Spot 72, 500 on the top side. And then that 0 DTE call resistance and 0 DTE call wall kind of framing the recent low. Never really got down there as well, but that's kind of a level to think about also going forward. So that is the Canadian dollar picture.
Well, all right. And I think that wraps us up today for hot commodities, but keep an eye on these, you guys. You know, metals, energy, and currencies, and even grains are really moving these days. And so it's always fun to check out other markets.
Absolutely. Tracy, have a great long holiday weekend for Easter, and looking forward to talking to you again pretty soon. We do have a 2:30 session. A lot of questions in the chat going, hey, are we going live at 2:30? It seems like your Fridays is Thursday today. No, we are going low. We do have a substitution though. Elias is not feeling that great, so I think we're going to have. I think Nick is going to substitute with Stowe, if my understanding is correct, for that trading close today. Should be fun. So, Tracy, thanks again.
Thank you. See you in the chat this afternoon, you guys.
All right, all right. We'll be back at 2:30. Get some lunch, get some rest, and be ready to go.